Okay. Good morning. Good evening, everyone. Welcome to Baiju's Exam Prep IAS. This is Sham Kagur here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Let me know that I'm audible to you so that we can start the discussion for today. Done. Thanks a lot. So, yesterday, what we have discussed, we have not completed the concept of banking. Right? Most probably today we'll complete all the ideas related to banking. So yesterday, what we have discussed, basically, we have discussed the concept of certain important concepts in banking, such as Basel guidelines, correct? Basel guidelines, Basel 1, Basel 2, and Basel 3. Basically, Basel is a place in Switzerland wherein we have set up an institution by the name of Bank of International Settlement, and this Bank of International Settlement will basically provide guidelines, will announce guidelines to promote health, financial health of the banking sector. Three rounds of Basel guidelines have been announced: first, second, and third. First, second, and third. We have implemented first and second. We are in the process of implementing the third. Before that, what we have discussed, before Basel guidelines, we have discussed the concept of the idea of lending rate regime. Okay, lending rate regime. I said right now the two very important lending rate regimes are basically the one, the MCLR, marginal cost of funds based lending rate, and the second one is external benchmarking. And what happens in marginal cost of funds based lending rate? Basically, the idea is that in marginal cost of funds based lending rate, there are various parameters that have been announced or that have been provided by RBI, using which the banks will decide what is their lending rate, such as negative carry on CRR, such as the operational expenditure, the tenor premium profits, etc. But over a period of time, Reserve Bank of India has found that monetary policy transmission is inefficient. Hence, right, what we have done is we have introduced a new system by the name of external benchmarking. In external benchmarking, the banks will have to link, right? That's very important point. Link or earmark or connect their lending rate to an external parameter such as repo rate. And whenever the repo rates will keep on changing, right, automatically the lending rates will also keep on changing. That's a concept of external benchmarking. Before that, we have discussed nationalization in the banking sector, nationalization, and then the concept of the merger of banks, merger of public sector banks. Why did Government of India go for nationalization? The first round happened in 1970, second round happened in 1980. The reason behind nationalization is very simple. Government of India wanted to ensure that certain important sectors such as agriculture sector will get access to institutional credit. They wanted to ensure that the banking sector will open up branches not only in cities but also in villages, etc. For taking care of all of this, Government of India has gone for nationalization. And after that, right, post 1991, we have not gone for any nationalization. Reason is Narsimham Committee recommended against nationalization. Now we are discussing the concept of mergers, idea of a big bank, etc., etc. Okay, right. So before that, some other functions of Reserve Bank of India, some other functions. For example, managing forex reserves. We have not yet discussed the details of forex reserves. We'll discuss it later. Please don't worry. Right. Apart from that, the Reserve Bank of India's function in monetary policy, that is credit control measures, especially we have discussed yesterday the qualitative set of tools, right? So these are certain very important aspects that we have discussed yesterday regarding RBI as well as banking sector. Now, before I go forward, this is where we stopped the discussion yesterday. That is the idea of a non-performing asset. This is exactly the slide where we stopped the discussion. Before I go forward, please do let me know, has everybody read the newspaper today? Right, we will start the discussion now. Has everyone read newspaper today? Right, whichever newspaper, right? You will simply say, "Sir, I read the Hindu." Right, "Sir, I read Business Line," etc., etc. Was there an article regarding WPI? Was there an article regarding WPI? Right. So, are you able to understand? Are you able to understand those particular technical terms which are there in the articles, such as WPI for the sixth straight month? It is there in a deflationary measure. It is in deflation, right? I hope you understand what you mean by deflation now, right? So it is there in deflation. This is a sixth month. Base effect is very high. That is the precise reason it has fallen into depression, etc., etc. So I hope you understand what we are discussing in the classroom. How do you apply that in real life? How do you apply it in current affairs? How do you read it? Right? What is the information that you need to derive, etc., etc. Right? So these are certain points I just wanted to discuss before I start the discussion today. Now let's start. Yesterday we looked at the definition of NPA. Correct? That was the last point. We understood the definition of NPA. What is the definition of NPA? Non-performing assets are nothing but the loans or advances which are given by the bank to the customer where the borrower doesn't repay for 90 days. The borrower doesn't repay for 90 days. If the borrower does not repay for 90 days, automatically the bank will classify this as a non-performing asset. Now, before that, if the borrower repays the loan promptly, that is, you have taken the loan, you will repay the loan without any delay, without any default, etc. Then, in that particular case, this asset is referred to as a standard asset. Is it okay? You take a loan, you repay promptly without any delay, without any default. You will repay the loan promptly. That is called as a standard asset. And after that, if you don't repay for 90 days, we will classify this as a non-performing asset. But before non-performing asset, what is the classification? For example, you take a loan today, right? And you're supposed to repay every month before 5th. What if you don't repay for 30 days? What if you don't repay for 60 days? In that particular situation, what the loan account will be classified? Please remember, before classifying it as a non-performing asset, because if you don't repay for 90 days, it becomes NPA. But before that, what is the classification? It is referred as a special mention account. That is, remember this, you take a loan, you do not repay from the due date for the next 30 days. It is called as a special mention account 0. You don't repay for 31 days to 60 days, then special mention account 1. And from 61 days to 90 days, it will be classified as special mention account 2. Anybody has a problem with this? I'll repeat it again. You take a loan, don't default, repay correctly, then standard asset. But let's say 5th of January, 5th of January, that was the last date. What if you don't repay on 5th of January? Then from the 6th of January, they will classify this as special mention account. So for the next 30 days, it will be classified as SMA 0. After 31st, after 38 days, from 31st to 60th day, special mention account 1. From 61st day to 90 day, special mention account 2. This is how the loans are classified. And after 90 days are over, you don't repay the loan, then it will be classified as, right, basically a non-performing asset. It will be classified as non-performing asset. Now, once it is classified as non-performing asset, is there classification within NPA also? There are three types. Listen to me carefully. Once your loan has been classified as a NPA for 1 year, once it is classified for 1 year, it will be called as a substandard NPA. And after 1 year is over, for the next 3 years, after 1 year is over, for the next 3 years, it will be classified as a doubtful. And after 3 years is over, it will be classified as loss making NPA. This is how the classification is there for non-performing asset. Now, why? Like many of you ask me, sir, what is the reason? Why does RBI have this kind of a classification? Reason is, as a bank, imagine you're a manager, right? And I've taken a loan from you. If I don't repay it for 90 days, automatically you will call me and say, sir, if you don't repay it for next one day, If you do not make a repayment, then I'll classify you as a non-performing asset. I hope you understand. I will classify you as a non-performing asset, right? And even there also, as the days go by, more the delay you make, right? Basically, it will become more severe. That is, the steps taken by the banking sector will become much more severe. For example, what if you take a loan and you do not repay, your account is classified as NPA? Then what will the bank do? There is a system called as NCLT, right? NCLT stands for National Company Law Tribunal. National Company Law Tribunal, NCLT. What is the use of NCLT? Understand this carefully. If a company will take a loan from a bank, company, that's very important. Company will take a loan from a bank and it will not repay the loan. In such cases, the bank will file a case against you at National Company Law Tribunal. And what if you're an individual? Individual means a person, such as you and me, we are individual borrowers. So, in case of an individual borrower, you take a loan and you do not repay, then the bank will file a case at Debt Recovery Tribunal. At Debt Recovery Tribunal, right? DRT, Debt Recovery Tribunal. So remember the logic here. A company takes a loan, doesn't repay, then the complaint will be filed. Litigation will be filed at NCLT. And if an individual takes a loan, doesn't repay, then basically, right, the application will be filed at Debt Recovery Tribunal. Now, why? What is the reason why NPAs are very high in India? Why NPAs are so high generally in case of India, especially in the last couple of years? In the last couple of years, reasons are as following. First one, company has taken the loan. It is supposed to manufacture, sell it in the market. I'll just give you a simple supply chain. Listen to me carefully. Here is a company. Company will take loan from a bank. Company will take loan from a bank. It will manufacture goods, sell it in the market, sell it in market, generate revenues, and and basically repay the loan. All of you okay with this cycle? It's basically a cycle, right? Bank will give a loan to a company. Company will manufacture, sell, earn money, and repay the loan. Again, next year, take a loan, manufacture, sell, right? Earn money and repay the loan. Cycle will continuously take place. But what if I say, let me take a current affair so that you understand. What if I say there is a huge drop in the demand for goods and services in the market? Can you find a recent example for this? Can I say, what if there's a pandemic? Tell me now. What if there is a pandemic? During pandemic, you please tell me, is there a higher demand generally, not specific product I'm talking, generally in the market, is there a higher demand for goods and services? Right? Don't you think during pandemic, the demand for goods and services in the domestic market will go down and in the international market will also go down? All of you okay with this? During pandemic, I'm talking about pandemic, right? So demand will go down, not only in India, but also in USA, but also in, let's say, Australia, but also in Japan, European Union, etc. Now, think of it. If a manufacturer is there, as a result of the pandemic, the manufacturer will not be able to export the product to the international market, because in the international market also there is a lower demand. In the domestic market also there is lower demand. As a result of this, can I say the company might incur losses? Correct? As a result of this, because of a lower demand in the domestic market as well as international market, company might incur losses. And when the company will incur losses, they will automatically not repay the loan they have taken. They will start defaulting, delaying, not repaying the loans that they have taken. As a result of this, don't you think the loans which are there with the banks, which they have given to the company, will become NPAs? All of you okay with this? Right? The loans which are there with the banks, right, which they have given to the companies will become NPAs. So whenever there's a slowdown, whenever there's a recession, whenever there's a disruption in the economy, not only in India, but also in international market, it will definitely have an impact in the NPAs in India's banking sector. That is the first and second reason. Now, before I go forward, I'll just introduce one more term to you. There is a term called as twin balance sheet problem. Twin balance sheet problem. Please do let me know. Yesterday we have discussed the concept of a balance sheet. Again, not in detail, but just the basics of balance sheet. Do you remember what is a balance sheet of a company? Do you remember what is there in the balance sheet? In the balance sheet, generally you will have assets as well as liabilities. Now start answering this question. If a company starts incurring losses because of the pandemic, if the company starts incurring lot of losses like this, don't you think the balance sheet of the company will come under pressure? Let me know. A very simple question, by the way. If the company will start incurring losses, on one side they are spending, on the other side they have taken the loan, they are incurring losses, will it put lot of pressure on the balance sheet of the bank? Answer is yes. And on the other side, these loans are assets of the bank. The loans are assets of the bank. And if these assets become NPA, does it not mean there is a pressure on balance sheet of the bank as well? All of you will agree with me? There's a pressure on balance sheet of the bank as well as the corporates, that is industries. So when there are two balance sheets under pressure, can I call this as twin balance sheet problem? All of you okay with this? Why this is referred as a twin balance sheet? Right? The balance sheet of companies, that is industries, which have taken loan, it is under pressure. And the balance sheet of the bank, which has given loan, it is also under pressure. Hence, this is called as a twin balance sheet problem. Right? Just be very careful. It was mentioned very recently by Reserve Bank of India. Now, come back to the discussion why NPAs are higher. Lower global demand as well as domestic economy. Whenever there is right, let's say a recession, slowdown either in domestic market or the international market, it will have an impact on the companies, and that might add to higher NPAs in India. Third one, increasing number of willful defaulters. Increasing number of willful defaulters. Now, before I tell you what is the impact, what do you mean by willful default? Willful default simply means a borrower means the person who has taken the loan has sufficient money, has sufficient asset to repay the loan, but they will purposely default on repayment of the loan. Is it okay? I'll repeat it again. Please listen carefully here. What do you mean by willful defaulter? A borrower. Borrower can be an individual. Borrower can be a company. So the borrower has sufficient financial resources to repay the loan, but they will not repay the loan. They will purposely not repay the loan. They will default on the loan. These are called as willful defaulters. Can I give you an example so that automatically all of you will understand? Right? What about Mr. Vijay Mallya? Let me know. What about Mr. Vijay Mallya? Again, don't write names in the UPSC exams. UPSC is not focused on that. All of you will agree with me. Mr. Vijay Mallya had sufficient financial capacity to repay the loan, but defaulted on the loan. Right? So I hope you understand the logic. These are called as willful defaulters. Right? So the number of willful defaulters also has increased in India. And when number of willful defaulters increases, automatically NPAs also will start increasing. Fourth point, inefficient functioning of inefficient functioning of debt recovery tribunals. Inefficient functioning of DRT means debt recovery tribunals. Now, what do you mean by inefficient functioning? I'll ask you a very simple question. Right? Please let me know the answer. Participate so that you understand. I'll give you two examples. Let's say example 1 and example 2. Let's say there are two judges. Let's say there are two judges who will take up 10 cases. Who will take up 10 cases. And let's say there are seven judges who will take up the same number of 10 cases. Now, don't try to introduce any other condition. Don't say, what if this judge is like that? What if this is like that? Don't worry about anything else. Simple question to you now. In these two examples, where do you think cases will be cleared much more faster? All of you agree with me, right? Some of you are giving very interesting answers. Very interesting answers. My dear, it will be example 2. Many of you are giving me an example 1 as an answer. How? Please tell me what is your reasoning behind it. Don't you think more number of judges, they can take up cases and they can clear the cases much faster? Otherwise, are you not reading in the newspapers where Supreme Court of India very often says whenever there is a delay in the appointment of judges, it will put more burden on judiciary. That is where current affairs plays a very important role. Right? Have you not read in the newspapers where Supreme Court of India's judges, CJI, etc., they will say that whenever there's a delay in the appointment of judges, it will put lot of burden on the judiciary. Why? Number of cases are very high. Right? But if the number of judges appointment is delayed, it means number of judges available to take up cases are low, which means cases which are pending will be further delayed, and the new cases which are being taken up, that will also be delayed. So I hope you understand. Very simple example, and even here also a lot of you making mistake. Right? It's a very simple question, no trick, nothing else. So all of you will agree with me. When number of judges or experts to take up the cases are increased, automatically that will help in taking up and clearing cases much faster. Now apply the same logic to debt recovery tribunals. The DRTs are supposed to take up the cases whenever individual borrowers default. I repeat, whenever retail borrowers default, the DRTs are supposed to take up cases and clear in 6 months. Right? Clear the case in 6 months. But the number of cases which have been filed have increased, and the number of judges which are there in the tribunals are very, very less. And as a result of this, don't you think lot of cases will be delayed because of it? Is it okay? Lot of cases will be delayed because of it. Right? So as a result of this, NPAs in the banking sector which are there in the balance sheet will also start increasing. Okay, done. Next one, governance issues. Now, some of you are asking questions on constitutional bench in economics class. Some of you are asking questions about constitutional bench in economics class. My dear, time and place. Time as well as place. Okay. I'm not a faculty for polity. I'm an economics faculty. Just to make you understand why there's a problem with the DRTs, I gave you that example. That does not mean that I'll take up discussions about today's judgment on same-sex marriage or let's say the electoral bonds, and I'll start discussing that. I'm not the right person. I'm economics faculty. I'll stick to economics. Okay, last one, governance issues. What is this problem of governance issues? Why it will add to, right, let's say rising NPAs in the banking sector? I'll start with a very simple example. Imagine you have been given a contract by the government to construct, let's say, 1,000 kilometer stretch of national highway. Okay, very simple example. You have won the contract. You are supposed to construct 1,000 kilometer stretch of national highway. Now, what if Supreme Court of India will rule and say this 1,000 kilometer stretch is passing through certain biologically sensitive area or ecologically sensitive region? So I will not allow you to construct this particular road. And Supreme Court of India will put a stay on the construction of road. Right? Or else you have taken lot of approvals from the central government. You are clear to construct road. Now you're constructing road, state government authorities will basically go to court or issue an order for stopping construction because there is some issue with the land, or you have acquired land, right? The owners of the land, some of the owners have gone to the court, filed a case against you. Now please tell me, in all these cases, in all these three examples that I've given just now, do you think construction of infrastructure will be completed? Let me know. Right? Will the construction of infrastructure be completed? No, it will not be completed. I can give you many examples in India. I'll give you the latest example. Latest example, by the way. All of you heard of bullet train project? Tell me. All of you heard of bullet train project? Anybody in the classroom who has woken up right now and says, what is this bullet train project? Very recently, bullet train project, there was a judgment by the court where they said you'll have to alter the plan in particular region. You'll have to alter the plan for the bullet train because it is passing through ecologically sensitive zone. As a result of this, bullet train project plan had to be changed in that particular stretch. In that particular region, the plan had to be changed. In many of the states, have you not come across metro projects running into problems? Correct. Metro projects are running into problems. Right? In many of the states, highway projects, railway projects getting stuck up because state government has raised a concern, or central government has raised a concern, or a Supreme Court of India has put a stay on it, High Court has put a stay on it, people have approached judiciary, etc. But logic is simple. In all these cases, what will happen? Project will not be completed. And if you have taken the loan, if you have taken the loan from a bank to construct the project, you are not generating revenue, you will not repay the loan. As a result of it, the project loan will become non-performing asset. So there are so many issues. There are so many issues as to why non-performing assets in India's banking sector in the last couple of years, especially in the last decade, have been higher. Now, if the NPAs are higher, what is the problem? If NPAs are higher, what is the problem? Right? These are the problems. First one, it will affect the profitability as well as a liquidity that is available with the banks. All of you will agree with me? I'll repeat the statement. Whenever NPAs start increasing, it will affect the profitability as well as a liquidity that is available with the banks. Liquidity here simply means how much money is available for the banks to provide loans. Very simple. I'll repeat it. Right? Liquidity in this context means how much money is available for the banks to provide loans. That is called as liquidity. So if the loans are not repaid to the bank, automatically it will reduce the profits. It will also reduce the money that is available for the banks to provide further loans. Second one, if the banks will start incurring huge amount of losses, or let's say if the NPAs are very high, don't you think banks will also be concerned about lending to certain sectors? Does it make sense to you? Right? Otherwise, let me give an explanation to this. Let me give you an example. Imagine you're a manager. Last year, you have given lot of loans to, let's say, steel sector. Okay, let's say hypothetically, you have given lot of loans to steel sector, and lot of these loans have become non-performing assets. Now, simple question to you people: next year, will you issue more loans to the same sector? Anybody in the classroom who is a manager who will do that? Right? So I hope you understand. It will definitely have an impact on lending activity of the banks. Right? Rather than giving to steel sector, you might increase it to another sector. You might reduce in all the sectors because in all the cases NPAs are very high. So lending activity, right? The quantity of loans given by the banks will also be affected. Okay. And one more point. If the loans are becoming, lot of loans are becoming NPAs, now the bank, when they will provide new loans, they will try to charge a higher rate of interest. Why? Understand the logic behind it. Understand the logic behind it. Imagine here is a bank. It has given one loan and this has become NPA. If this has become NPA, now it is giving one more loan. Don't you think in order to basically offset, right, basically reduce the losses that they are incurring because of this NPA, they will charge a higher rate of interest to the second loan, correct? Right? They will try to charge a higher rate of interest on other loans, right? And that is also one of the reasons. Please remember that is also one of the reasons why monetary policy transmission is right not very effective in India. It's not very efficient. One of the reason is the bank says RBI has reduced repo rate, but I'm incurring losses in lot of these NPAs. So why not? Why not? Right? Charge a slightly higher rate of interest so that I will earn more money. Right? That is basically the argument. Okay. Next one, investor confidence. Imagine you have lot of deposits. You have lot of deposits in one of the banks, and every day you are reading in the newspaper the bank is incurring losses, the bank's NPAs are higher, etc. Will you keep your deposits in that bank? Let me know. Right? Will you keep your deposits in that particular bank? No. Will you purchase the shares of that bank? Will you purchase the bonds of that bank? No, you will not do that. Investor confidence will be affected. Next, higher rate of interest charged by the banks, which means now the borrowers, the people who will take loan, have to pay higher rate of interest. Don't you think that will affect the demand in the market? That will affect consumption in the market. The companies which want to take a loan, because the interest rate is higher, they might simply not take a loan, which will affect investments in the market. Right? That is also a problem. Next, right, investment decisions will be put on hold. And finally, if demand comes down because of higher rate of interest, investments will come down because of a higher rate of interest, it will have an impact on GDP growth rate of Indian economy. Right? It should make perfect sense to you, because the investments will start coming down, right? The demand will start coming down. Automatically, GDP growth rate will also be affected. So these are certain very important effects or impacts of having higher non-performing assets in the market or in the economy. Okay. Now, next one. Now, what will happen? What has the government of India done? What has the government of India done in order to address this particular issue of high NPAs? I'll discuss one very important law here. Please listen to me carefully. There is a law which has been introduced by the government in 2016 by the name of Insolvency and Bankruptcy Law. I'm using the term law. Instead of law, they will also say Insolvency and Bankruptcy Code. Now, what is this insolvency and bankruptcy code or law? Let's go point by point. Listen to me very carefully. Point number one. There is a regulator which has been appointed by the government under IBC. What is the name of the regulator? Insolvency and Bankruptcy Board. It's a regulator. For example, do we have a regulator in banking sector? We have a regulator in insurance. We have a regulator in the stock market. In the same way, for insolvency also, now there is a regulator, an institution which has been set up by the government, Insolvency and Bankruptcy Board. Point number two, insolvency resolution. IR simply means insolvency resolution. Now, please understand what do you mean by insolvency here. Whenever you take a loan, let's say there is a company will take a loan from a bank. C is company, B is a bank. So whenever a company will take loan from a bank and doesn't repay, there are two options. Option number one, the bank can sell this company to a new buyer. All of you okay with this? The bank which has given loan to the company, they can simply sell this particular company to a new buyer, collect money. Or else the bank will basically close the company. Close. Close means, remember this is called as liquidation. Closing of the company is called as liquidation. That is, they will close the manufacturing facility, they will remove all the employees, whatever assets are there of the company, they will try to sell off the assets in the market. That is called as liquidation. Now, please tell me, whenever you sell it to another buyer. This is called as a resolution, insolvency resolution. Whenever you sell it to a new buyer, you will get money. Whenever you close the company and sell off the assets of the company, you will get the money. But think logically and tell me which one is preferable. Which one is preferable? Is selling to a buyer preferable or closing the company is preferable? Think of it. Whether selling this particular company to a new buyer is preferable or closing the company is preferable. For example, if you're reading the newspapers, are they trying to find a new buyer for one of the civil aviation companies in India? Yes or no? Right? Are they trying to find a new buyer? New buyer. For example, those who are saying, sir, which company? Go Air. My dear, read newspapers. Go Air. Are they not trying to find a new buyer for one of the civil aviation companies? So I hope you understand. Selling to a new buyer is always preferable. It is preferable. It may happen or may not happen. It is always preferable. Why? A company will be sold to a new buyer, people are not removed from the jobs. Manufacturing is not stopped, right? A new buyer will come, manufacturing will continue, people will still remain employed. But on the other hand, if you close company, let me take the example of Go Air only. If there is no buyer for Go Air, we will close Go Air. Now, please tell me what will happen because of that. Don't you think a lot of people will lose jobs because of that? Right, the service sector in that particular market, service supply will be disturbed, will be disrupted, right? So don't you think selling to a new buyer is always preferable? That is, insolvency resolution is preferable compared to liquidation. Please remember this. Insolvency resolution is preferable compared to liquidation of the company. Okay, so insolvency resolution process will be handled by an expert now. The name of the expert is called as insolvency professional. Third one, the insolvency resolution process will be completed within stipulated period of time. Within stipulated period of time. What is the time period which has been prescribed under the law? Prescribed under the law. The time period which has been prescribed under the law is 330 days. Under the insolvency and bankruptcy code, within 330 days, you're supposed to finish the insolvency resolution process. There's a separate process for both when individual borrowers will take a loan and default, and when companies will take a loan and default. Now, do not worry about individuals here. Focus on companies, focus on corporates. Now, how the process will be done? How the process will be followed? This is a process. Let's go step by step. Step number one, either the lender or borrower will approach NCLT and will file a case, will file an application. Is it okay? Either the borrower or the lender will approach NCLT, file an application. Instead of the term lender or borrower, they can also use either creditor or debtor. Either creditor or debtor, or of all of you are okay with the term creditor and debtor instead of lender and borrower, because these are similar words. Okay, so either lender or borrower will approach NCLT, file an application. Now NCLT in the next 14 days, is either allowed to accept the application or is supposed to reject the application. Either accept or reject the application. Once they've accepted the application, insolvency professional is appointed. Now the insolvency professional will put together all the committee of creditors. Committee of creditors means what? Please tell me. Can I say creditors means lenders? Please do let me know. Can I say creditors is nothing but lenders? So all the lenders, specifically secured lenders. Please remember this. Specifically secured lenders, they will form a group which is called as a committee of creditors. Now the committee of creditors will discuss whether should we sell the company to a new buyer or we will close the company. If there are new buyers who will come forward, right, bidding process will be there. If there are new buyers who will come forward, and if the committee of creditors are happy with this particular proposal, They will sell the company to a new buyer. What if there is no buyer? And what if there is no buyer? If there is no buyer for this company, then there is no option available. Then the committee of creditors will decide that because there is no buyer who has come forward, there is no proposal, we will simply liquidate the company. We will simply close the company. Right? So that is how the process will be conducted, and all of this process, that is basically from the step number 2. I'll write it here. From this particular step, from step number 2, the number of days that has been prescribed as per the authority or as per the law, insolvency and bankruptcy law, it is 330 days. All of this process, that is appointment of insolvency professional putting together committee of creditors, deliberating means discussing, should we sell the company, should we liquidate the company, right? And then informing to NCLT, etc. All of this has to be done within 330 days. Now many of you will simply say, sir, what if, right? What if committee of creditors do not come to a conclusion? Right? If there is no conclusion, if there is no, right, let's say majority, because please understand, let me ask you a very simple question, right? Understand the logic here. Generally the decisions of a committee of creditors is done by majority. But let me ask you a very simple question here. Imagine there are 4 lenders, or let's say 5 lenders. Imagine there are 5 creditors, secured creditors to a company. A will give a loan of, let's say, 10 crore. B would have given a loan of 12 crore. C would have given a loan of 15 crore. And D would have given loan of 13 crore. All of you okay? 10 plus 12 plus 15 and plus 13. Right? And E would have given loan of, let's say, 960 crore rupees. He would have given a loan of 960 crore rupees. Total value of the loan will be how much? 1000 crores. All of you okay with this? Total value of the loan will be how much? 1000 crore rupee. Just a simple CSAT. 15 plus 12 plus 13 will be, right, basically 30. 30 plus 10, 40. 40 plus 960 is 1000 crore. Now please tell me, whenever these are the 5 creditors, should you go by majority of the loan given to decide in the committee of creditors, or should you simply go by majority of numbers of creditors? What does make sense to you? Think of it. You need to decide based on majority, correct? Based on majority, you will have to decide whether to sell or liquidate. So should you go based on number of creditors or based on the value of the loan they have given? So don't you think it makes better sense? It makes better sense if you have based on the value of loan. Is it okay? Right? So again, please understand, many of you will basically say, Arey Baba, how? Okay, sir, value of loan will be 1010 crores. Okay, then whatever the value is, don't worry, Baba. Don't worry about value of loan, right? You're focusing on wrong thing here. Don't worry, whatever be the value, let's say more than 1000 crores. Now, argument that I'm trying to make here is simple. It should not be based on number of creditors. It should be based on value of the loan, value of exposure, right? So committee of creditors will come together. They will have a discussion, deliberation, and they will basically decide whether to sell or liquidate. But what if, right, in any case, right, there is no decision made, right? Value of creditors, you are not reaching more than 50%, etc. Some of them are not coming, some of them have gone to court, etc., right? So in such cases, that is where the decision cannot be done, where the decision is not arrived in case of the committee of creditors. In such cases, by default they will go for liquidation. By default, they'll go for liquidation if the committee of creditors do not come to a decision. And please understand, in certain cases, you require a majority of 75%. In certain cases, you require a majority of 66%, etc. So from case to case basis, requirement will be different. You do not worry about it. This is basically the process. Now let's do the critical evaluation of this. What has been, right? Basically the critical evaluation. What are the positive aspect? What is the concerning aspect related to this? Let's start with positive aspect. First one, earlier, I repeat, earlier there were different laws to take care of insolvency resolution. I'm discussing first point. Listen to me very carefully. Earlier, there were different laws to take care of insolvency resolution. Now, there is only one law. So, don't you think, compared to having multiple laws, having one law is always better? I'll repeat the statement and let me know. Earlier, there were different laws. For example, there was a Surface Act, right? There was a NCLT, that NCLT Act. There was a right BIFR. There was right Companies Act of 2013. So there were different laws which used to take care of insolvency resolution. But rather than having multiple laws, now there is only one law. So don't you think that will right basically simplify the whole process? It will promote ease of doing business. It will simplify the whole process and it will also promote ease of doing business in India. Second, in this particular law, as per the provision, 330 days, as per the provision, within 330 days, you're supposed to finish off the insolvency resolution. earlier, earlier there was no such provision. Earlier time bound, right, time bound resolution was not there. There was no limitation on how many days are required. Now, right, the law says within 330 days it should be finished. But practicality is different. What happens in reality, I'll tell you after some time. Have patience. Third one, compared to earlier situation, right, I'll tell you one point here. Right, as per a survey that was conducted for insolvency resolution, earlier on an average it used to take 4.3 years. For insolvency resolution, earlier on an average it used to take 4.3 years. Now currently under the IBC, for 5 years it is much lower than 4.3 years. It is much lower than 4.3 years. Why it is more than 330 days, you'll understand in some time. Have patience. According to the law, it should be done in 330 days, but it doesn't happen lot of times. I'll tell you the problems. Fourth point, it will provide the power to both secured as well as unsecured creditors. Whenever the borrower does not repay, they can simply drag the company to NCLT. Now, what is this? Understand this very carefully. Earlier, you have taken a loan, you are a company, you have taken the loan, and you are delaying repaying the loan. You are simply delaying the repayment of the loan. Right? The borrower simply will go to the court and file an application against you. That particular application will be taken after a lot of days, and the whole process will be delayed for a very longer duration, because all of you know how judiciary actually functions in India. Right? So all of you will agree with me when I say, if the borrower does not repay the loan, you will go file a case, and that case will run for many days, many years in India. But now understand this very carefully. If I'm a company, I've taken a loan from you. If I do not repay the loan to you, whether you're a secured borrower or unsecured borrower, doesn't matter. If I do not repay the loan to you, you will go to NCLT, file an application against me. Is there a danger that I will end up losing ownership of my company? Let me know. Is there a danger because of IBC that I will end up losing ownership of my company? Of course, yes, there's a huge danger. So, don't you think this will basically promote change in the behavior of the borrowers? Let me know. Don't you think this will promote change in the behavior of the borrowers? That is, the borrowers will say, if I don't repay the loan promptly, you will go to NCLT and file a case against me. And when you file a case against me, right, the committee of creditors might decide to sell off the company to a new buyer, which means I'm losing ownership of my company. I don't want that to happen. I will repay the loan on promptly basis. right? So the biggest advantage, I repeat, the biggest benefit or the advantage of IBC has been that the behavior of the borrowers, especially the companies, has actually changed because of IBC. Remember that. Because if you don't repay, there is a danger that you will lose ownership of your company. That is the biggest advantage. So these are some of the advantages of insolvency and bankruptcy code. Having said so, are there any concerns regarding how IBC is actually implemented in India? These are some of the concerns. Point number one, the actual time taken for accepting and admitting applications is very high in India. I'll repeat, the actual time taken for admitting, accepting application is very high. In some of the cases, it has taken more than 100 days for accepting or rejecting this particular application. Many of you ask me, sir, how is that possible? Because according to the law, within 14 days, once you file an application, within 14 days, they will either have to accept it or reject it. Why is it taking more than 14 days? Apply the same logic that we discussed here. Do you remember this example? Do you remember this? Apply the same logic even to NCLT. Right? What if number of cases filed are very, very high? Right? Lot of cases are being filed, but we do not have sufficient infrastructure. We do not have sufficient number of judges. As a result of this, don't you think first stage, acceptance stage itself, rather than 14 days, it might take 40 days. It might take right 100 days also. It might take right 80 days also. So that is one of the biggest problems. First, second problem. Second problem associated with this IBC model, actual time taken for resolution is also very high. As per the law, you are supposed to complete resolution in 330 days. But in reality, what is happening is even this is taking more than 330 days. Now, many of you ask me, how is that possible? Because the law says 330 days. Why it is taking more than 330 days? I'll give a very simple example. Imagine these are the five creditors. These are the five lenders to my company, and I have not repaid, and this has been taken to court. I'm sorry, this has been taken to NCLT. This has been taken to NCLT. Now the committee of creditors has been framed, or it is about to be made. B and C will go to, right, let's say Allahabad court and file a complaint against me, file a litigation against me. A will go to Bombay High Court, file a litigation against me. A simple question to all of you, right? And imagine all of you want to purchase my company when it will be put under NCLT. Now, please tell me, if B and C have filed a litigation against me in Allahabad High Court and A has filed a litigation against my company in Bombay High Court, how many of you will be interested in purchasing my company? Let me know. How many of you will be interested in purchasing my company? Will anybody come forward, bid and purchase my company? People will not come. Companies will not be interested. Why? What if you purchase this company and in the court, case will go in favor of A, B, and C? I hope you understand. Nobody wants to purchase a company which is already under a lot of litigation. Right? So that is the reason instead of 330 days, a lot of times, it will be extended. It will get extended. In many cases, it has been more than 2 years. Right? NCLT has not been able to clear the case. In many of these companies, it has been 1.5 years, not yet cleared this particular case. Reason is lot of operational problems are there. Lot of operational difficulties are there in case of IBC. Done. So that is the second problem. Third problem, most of the cases are going through liquidation. Most of the cases are going through liquidation. One of the objective of IBC was to ensure resolution will happen. Resolution will happen. That is, a new buyer will purchase this asset. But most of the cases are basically going through liquidation. Don't you think that will basically will counter whatever we wanted to achieve through IBC. Because argument was, right, liquidation is not good. We want a buyer, right? So that, right, the people will not be losing jobs, etc., etc. All of those arguments are failing. These are failing because a lot of these companies which have, right, been cleared under NCLT, most of them have gone through liquidation process. And finally, recovery rate is very, very low. Recovery rate means what? You are supposed to get, let's say, 100 crore from the company. You're a lender. You're supposed to get 100 crore from the company. After selling off or after liquidation, etc., instead of 100 crore, you will get only 30 crore rupee. Can I say recovery rate is 30% here? All of you okay with this? I'll repeat it again. Imagine you're supposed to get 100 crore from the company. You're a lender, right? You will take it to NCLT. Either you will sell it to a new buyer or you will liquidate, and you will be able to collect only 30 crore rupees out of it. Can I say a recovery rate is 30%? So recovery rates are around 30%, which is lower. We need to increase the recovery rates. Done. So these are some of the concerns associated with insolvency and bankruptcy code. Now let me introduce one more current affairs concept here. One more current affairs concept, NARCL, National Asset Reconstruction Company Limited. NARCL. Very important. Listen to me very carefully. Current affairs. You will not get all of this in the book. I've taken a lot of the concepts from current affairs, a lot of concepts from other chapters also, so that this chapter is so bulky. That is the only reason, and most of them are current affairs. Let me start. Point number one, there is a concept of bad bank. There is this idea of a bad bank. Now, what do you mean by bad bank? I'll explain it. But let me start with a very simple example. Imagine you're a manager. Okay, you're a manager in a bank. You have given a loan to me. I have not repaid the loan. Now, please tell me, are you an expert in recovery of loans, or are you an expert in collection of deposit and giving loans? Very simple question. You have given a loan to me, I have not repaid. So you tell me, are you an expert in recollecting the loans, or are you an expert in collecting deposit and giving loans? Right? Don't you think as a bank, as a manager, etc., you are more of an expert in terms of giving loans, in terms of collecting deposit? Your expertise in that is in that area. All of you will agree. You are more experts in collection of the deposit and giving loans. You are not experts in recoveries. You're not experts. But if you have NPAs, your bank has NPAs, by running behind those NPAs for recovery, are you not wasting lot of resources? I hope you understand. Are you not wasting lot of money, resources, etc., in running behind recovery of these loans? So what should be done then? What should be done? There is a concept called as a bad bank. There is this idea called as a bad bank. What will happen in bad bank? Imagine there are four banks, B2, B3, and B4. Okay, there, imagine there are four banks, B1, B2, B3, B4. All of these banks will have certain NPAs. In all of these banks, NPAs will be there. What these banks will do is they'll simply sell these NPAs. They will simply sell these NPAs to another institution which is called as a bad bank. They will sell these NPAs to another institution called as a bad bank. And what is the importance of having a bad bank? Bad bank will have experts in recovery of loans. They will have experts in recovery of loans. Recovery in the sense, either they will run behind, run not literally, they will follow up with the borrowers, try to recover the loans, or else they'll simply try to sell off the company. They will simply try to sell off the loan to somebody else in the market. This is the concept of a bad bank. This is basically the idea of a bad bank. Now, please look at the picture and tell me, don't you think if you have a bad bank, the other banks can focus on their core activities, can focus on their expert activities, and they will not be worried about having NPS? Correct or not? Right? If this kind of a structure is available, right, the banks will be more worried about their expert activities. What is their expert activities? Give loans, right? Collect a deposit. Right? That is their expertise. They will focus on that, not in recovery of bad loans. Right? That is one advantage. Second advantage, please have a look at it. If you have a bad bank, can I say balance sheet of the banks can be cleaned? Second point, if you have a bad bank, the balance sheet of the banks, right, that is B1, B2, B3, B4, they'll become much more clean in the sense, now the NPAs are not in the balance sheet of the bank, they'll become part of the balance sheet of this bad bank. So these banks can enjoy the benefit by transferring these NPAs to another entity. So their balance sheet will become much neat, much cleaner. And if banks' balance sheet become much cleaner, can they borrow more money from the market? Can they sell more bonds in the market? Can they sell shares in the market? Can they collect more deposit telling the customer, see, right, no problem with my balance sheet. I'm very stable now. That will also help the banking sector. Right? So these are some of the advantages of having a concept of a bad bank. But having said so, what are the concerns? What are the concerns with this kind of a model? If you're a manager, right, rather than you, let's take me, right, because it's a negative point. If I'm a manager and if I know there is a bad bank, right, don't you think while giving loans, I will not be worried whether the borrower is a correct borrower or the borrower might default in the future? I hope you understand. That is, I'll not be worried. I'll not be worried. Why? If the borrower doesn't repay, no problem. I will sell the non-performing asset to you. So don't you think banks might become more relaxed because there's a bad bank? The banks might simply feel, no worries. There's a bad bank. Even if the loans that I'm giving will become NPA, I will sell it to the bad bank. No worries for me. Right? So accountability part, that's very important. Accountability in the banking sector will start coming down because they might feel very relaxed. Right? They'll become very relaxed. Some of them might simply give a loan to a bad borrower only. Why? Even if it becomes an NPA, no issues. Right? I'll sell it to a bad bank. And second one, having a bad bank doesn't mean that NPAs will become lower. I hope you understand. Having a bad bank doesn't mean that NPAs will become lower. Having a bad bank will also mean that NPAs are there, but not in the balance sheet of the bank, but in the balance sheet of the bad bank. So I hope you understand. You are not addressing the problem. I hope you understand this. What should be your solution? You should implement certain reforms where creation of creation of NPAs should come down. All of you will agree with me. Listen to me carefully. You should be implementing a reform where creation of NPAs should go down. But this is a reform where creation will not go down. Right? Creation will be there. Right? NPAs are there. You're trying to address the issue of NPAs. Right? So precaution. This is not a precautionary move. It is more of a reaction. It is more of a reactionary reform. Right? So that is the precise reason. Please understand, concept of bad bank has both advantages as well as disadvantages. Now, in case of India, many of you are asking any example of a bad bank. In case of India, government of India very recently has established or basically promoted the establishment of a bad bank by the name of NARCL. In a nutshell, NARCL is a bad bank. Is it okay? Right? NARCL is basically a bad bank. Right? NARCL is an example of a bad bank in India. Now there is one more term here, asset reconstruction company. I'll explain this also. Listen to me very carefully. There is one more term here, asset reconstruction company. Now what is this asset reconstruction company? Let's start. Here is, right, let's say a bank. Here is a bank. The bank has given loan to a company, right? That is nothing but a loan. Okay, loan is there. The company doesn't repay. The loan becomes an NPA. The bank will simply sell the loan. Sell the loan means obviously company is giving security. All of you will agree with me. Company has given security, which means the asset, that is the loan, will be sold to a company called as Asset Reconstruction Company, ARC. Asset Reconstruction Company, ARC. Now, in case of India, please understand, if you ask me, sir, are there any ARCs? Yes, post 1990s. Post 1990s, multiple ARCs are there in India. Multiple ARCs are there in India. More than 20 ARCs are actually there in India. What will the ARCs do? ARCs will basically try to sell this asset, restructure, right? If that doesn't happen, try to recover. If that doesn't happen, try to sell it in the market, sell the asset in the market, sell the company in the market, and get the money. This is how, right? This is how the asset reconstruction companies will actually function. This is how ARCs will actually work. Right? Let me give a very simple example. You're a bank. You have given loan to a company. Company has not repaid. You will sell the loan to me. You will sell the loan to me, right? So I will give you certain amount of money. I will purchase the loan. I will try to, right, manage the company, right, by restructuring the company, etc., etc. If that doesn't happen, I will try to find out a buyer in the market. I will sell the company to the buyer and, right, have the recoveries. This is how the ARCs, asset reconstruction companies, are supposed to work. Now, in case of India, I said there are more than 20 ARCs. Post 1990, multiple ARCs have been opened in India. In India, ARCs have not been effective. I'll repeat the statement. I'll repeat the statement. ARCs have not been effective. Right? Very, very ineffective in India. Recovery rates are in single digits. Right? Recovery rates are in single digits. All of you understand recovery rates are single digits? Reason is very simple. The market in India is not as developed as the market in USA. In India, market is not as developed as the market in USA, right? In, or let's say, Western markets. So that is the precise reason what government of India has proposed and set up is a concept of NARCL. Listen to me very carefully. NARCL. It is an ARC. It is also working like a bad bank. All of you okay with this? NARCL is an ARC, asset reconstruction company, and it is a type of a bad bank in India. How does NARCL actually work? There are two parts to the NARCL. Listen carefully. Please listen carefully. I just don't understand why generally students do not listen to me, keep on typing anything else. Don't type about other subjects in economics. Listen to the economics first. How NARCL will function? Let's start. NARCL has two very important components. One is right, the NARCL itself, that is National Asset Reconstruction Company Limited, and the second one is IDRC. What is IDRC? IDRC, Indian Debt Resolution Company. IDRC stands for Indian Debt Resolution Company. Why there are two parts, I'll explain. Listen carefully. In NARCL, 51% majority ownership in the NARCL is with public sector banks. PSB means public sector banks. Whereas in case of IDRC, 51% ownership is with private sector banks. Majority ownership in IDRC is with private sector banks. Now, what is the function? How it will work out? I'll explain it. Listen carefully. Here is a bank. The bank will sell the NPA to NARCL, and NARCL will simply hand this over, transfer this asset to IDRC. IDRC will sell it to a buyer in the market, collect money, transfer to NARCL. NARCL will make the payment to the bank. Anybody has a problem with the sequence? I'll repeat it. Listen to me carefully. Bank will sell the asset to NARCL. NARCL will transfer the asset to IDRC. IDRC will sell the asset, collect the money, hand it over to NARCL or transfer it to NARCL. NARCL will pay the money to the bank. This is how NARCL model is supposed to work, or bad bank model is supposed to work in India. Now, many of you ask me, sir, why? Why do we have two entities? Why do we have two entities, NARCL as well as IDRC? Why can't we have simply NARCL? My dear, simple question to you people, please tell me, where do you think there is a lot of flexibility in terms of hiring people, removing people, paying salaries, etc., in a private sector entity or a public sector entity? Very simple question to all of you. Okay, think by the way. It's a very simple argument. Where do you think there's a lot of flexibility available? Right? Hiring, firing, paying salaries, very good salary packages, etc. All of you will agree it is there in private sector. Some of you are saying public sector. How? Can you give me an example? A public sector enterprise where you can match the salaries of private sector company. My dear, how? You please tell me. Do you think the salaries of right? Let's say take the example of public sector banks. You think the salary that is paid in to the employees of public sector banks is the same salary that is paid in private sector banks? Right? See what is the salary earned by high-end officials or top officials in a private sector bank. It will be a mind-boggling number. Very large salary packages. Very large packages. 30 crore rupees, 20 crore rupees, 10 crore rupees per annum, my dear. Right? Whereas, right, if you're the CMD of SBI, State Bank of India, it will be in terms of lakhs. Right? In terms of lakhs in case of SBI bank chairman, whereas in terms of crores in private sector banks. So argument is simple. Don't write all of this in the exam, but please tell me, if you want experts, if you want to hire experts who will find out, okay, where do we have to sell this asset, at what price we'll have to sell this asset, etc., don't you think that entity should have flexibility to pay higher salaries? Correct or not? That entity, right, entity should have a more flexibility. They should be paying more salaries to these experts. Now, if you have only NARCL, majority of NARCL is with public sector banks. Correct or not? Majority of right NARCL is with public sector banks. Do you think NARCL will be able to pay so much of salary? Do you think NARCL will be right having this kind of flexibility in terms of hiring and removing the employees? All of that will not be there. That is the precise reason we have one more entity where majority ownership is with private sector. At least now, does it make sense to you? At least now, does it make sense to you? In case of IDRC, 51% is owned by the private sector, which means they have a lot of flexibility in terms of implementation, in terms of selling, in terms of hiring, firing, etc. A lot of flexibility is there. That is the reason this kind of a two institute model is actually instituted. Okay, so NARCL is there, IDRC is there. They will buy the asset and sell and make the payment to the bank. Now, in the context of this, there are certain important points. Cabinet has cleared 30,600 crore rupee guarantee program, which are called as contingent liabilities. I'll explain that. Have patience. The bad bank, NARCL is a bad bank. I hope you know at least by now. NARCL is a bad bank. This particular bad bank will be taking over and resolving NPAs which are worth 2 lakh crore rupees. Which are worth 2 lakh crore rupees. And the government will be providing guarantees for 5 years on security receipts issued by NARCL. Now, what do you mean by all of this? Let me explain. Please listen to me carefully. Please listen to me carefully. Okay. Here is a bank. Here is a bank. They will sell a loan. They will sell a loan to NARCL. Okay, that is the first step. They will sell the loan to NARCL. Now, please tell me, if you are the chairman of NARCL, if the loan value is 100 crore rupees, how many of you will pay 100 crore and purchase a loan from a bank? Let me see. How many of you will pay 100, more than 100 or 200 crore rupee and purchase a loan? Don't you think it doesn't make any sense to purchase 100 crore? You will pay much, much lesser than 100 crore rupee. Yes or not? You will pay much, much less than 100 crore, because if loan value is 100 crore, you will not be able to recover 100 crore. That's a fact. That's a fact. You will not get 100 crore rupee. So what you will tell the bank? You will basically tell the bank, I will not give you 100 crore, I will give you 40 crore rupees for this. I will give you 40 crore for this particular loan. Let's say hypothetical number, let's say 40 crore. Now, NARCL will take this, sell it in the market and make recovery. Okay, through IDRC, it will make recovery. If NARCL doesn't get 40 crore rupees from the sale of the asset, don't you think that that's a problem for NARCL? I'll repeat the statement. If NARCL through IDRC will sell the asset, if they don't collect 40 crore rupees, that's a problem for NARCL then. So from where this extra money has to be given? That is the reason. Follow this very carefully. Imagine NARCL will transfer it to IDRC. IDRC will sell it in the market and pay 30 crore rupees to NARCL. Now, can I say there is a shortfall of 10 crore rupees? Correct? There is a shortfall. There is a shortage of 10 crore rupees. Now, from where this particular 10 crore rupees will be paid? Government of India has set up a fund where 30,600 crore rupees guarantees have been provided. Government says that 30,600 crore rupees, the money is there. If there's a shortage of 10 crore, from this amount, NARCL will take 10 crore rupees, pay it to the bank, and this 30 crore rupees, it will pay to the bank. Any problem here? It has recovered 30 crore, it will pay 30 crore. But it had promised 40 crore rupees. It had guaranteed 40 crore. There's a shortage of 10 crore. So it will take this extra 10 crore from this contingent liability fund which has been created by Government of India or allocated by Government of India. The 10 crore will be allocated from this particular 30,600 crore rupees. So thereby ensuring 40 crore payment will be done to public sector bank, or let's say any of the bank which has sold the NPA to NARCL. All of you okay with this? Can we go forward now? All of you okay with this? Right? So it's a very simple process. Again, I'm not entering into technicalities. Please understand, this is a very technical process. There's a concept of securitization, right? There's a concept of Swiss, Swiss bidding model, etc., etc. Right? All of that is very technical in nature. Let's not enter into that. Just understand the basic process. That is more than sufficient for UPSC. Now, what is the critical evaluation? What is a critical evaluation? Many of you are asking, sir, what if they make 50? What if they make 60? My dear, that is not going to happen. Don't worry, because a lot of charges are collected. If they earn more, NARCL will keep it in the form of earnings, charges that they have imposed and collected. But you are assuming something that is not happening, because in reality, it is not happening as of now. Because please understand, NARCL, National Asset Reconstruction Company Limited, is not going to take up new NPAs, fresh NPAs from the banks. NARCL will take up old NPAs. I repeat, NARCL will take up old NPAs from the public sector banks. For example, right, there are banks, even today, it's correct by the way, there are banks which have had NPAs which are 2 years old, 4 years old, 3 years old, etc. So these NPAs, which are very old NPAs, there'll be very few buyers for these NPAs in the market. Very, very few buyers, very negligible buyers. So there's a whole question mark over functioning of NARCL. In fact, Friday, today is Tuesday. Friday, as usual, I will give you certain articles related to banking sector, right? And I'll give you a couple of articles even related to NARCL. Read that, you will understand it, right? Functioning of NARCL has not been effective even today, right? So, but anyways, this is one type of a model that has been proposed. What is the advantage of NARCL model, right? We have discussed this. Let's put it in a nutshell now. First one, the NPAs will be transferred from banks to, right, the bad bank or NARCL. So banks balance sheet will become clean now. Experts will start handling NPAs. Banks can focus on their core activities such as borrowing, right, giving loans, etc. Right? And this basically, NARCL's case, initially will try to recover from large value NPAs, then will focus on smaller value NPAs. Because large value NPAs, which means a lot of money, lot of assets are stuck up in the economy, will try to resolve a large value NPAs, then will try to clear smaller value NPAs. Okay. So these are certain important advantages of NARCL, that is a concept of a bad bank. Having said so, what are the concerns associated with this? For example, point number one, we have discussed this. I'm just repeating it. Don't you think with this kind of a bad bank model, whenever government will propose a model of a bad bank or NERCL like this, it might make the banking sector much more relaxed. Correct? We have discussed this. It might make banking sector much more relaxed. Right? The banks may not be worried about whether they're giving loans to good borrowers or bad borrowers. In fact, I'll introduce one more concept here. This was very recently in the newspaper. RBI governor warned the banks. There is a concept called as evergreening of loans. Have you heard of this? Evergreening of loans. Evergreening of loans. What do you mean by evergreening of loans? Let me explain it. Imagine here is a bank and here is a borrower. Here is a bank, here is a borrower. That is, let's say you are a bank, I'm a borrower. I've taken the loan, but I'm not in a position to repay the loan. I'm not in a position to repay the loan. Now you are a very good friend of mine, or you'll take a lot of money from me, corruption. What you will do is to repay existing loan. I repeat, to repay existing loan, you will give me a new loan. All of you okay with this? To repay existing loan, you will give a new loan to me. This is called as evergreening of loans. This is never good. This is not at all good. RBI governor has warned the banks, do not enter into evergreening of loans. Why? What is the problem with evergreening? What is the problem with evergreening? Point number one, don't you think by evergreening, bank is not disclosing what is the real position of their assets? Think of it. And what is the actual position in the balance sheet? What is their actual position of the asset? What is the actual value of the asset? They are hiding it. They are not disclosing. And any guarantee that in the future the borrower will repay the loan. Any guarantee that in the future borrower is going to repay the loan? No. You're basically in certain situations you're postponing the event. That's it. You're postponing the event. Maybe after 2 years, again the borrower will default. So these are the problems associated with the concept of evergreening of loans. Right? So that is the problem. Please remember, this was mentioned by RBI governor a couple of months ago in one of the monetary policy discussions. So first one, right, the bad loans, the NPAs, creation is not going to come down. Creation will be there. And this is not a reform which will reduce the creation. Rather, it is trying to address by shifting the bad loans. We are trying to address by simply shifting the bad loans from one institution to another institution. That is not the right kind of reforms, right? We will have to implement many other reforms to reduce the creation of bad loans itself, right? So that is one. Second, banks might become much more relaxed. Third one, these are old NPS. Correct? These are old NPS. Will there be any buyer in the market for these old NPS? There is no guarantee. There is no guarantee, which means how much will be the recovery? It could be negligible. It could be very, very less. Right? So these are some of the concerns which have been raised in the context of National Asset Reconstruction Company Limited. Done? Can we go forward now? Can we go forward? The next concept that I'll be discussing will be cooperative structure. Cooperative. Cooperative banking. Very often this is there in the current affairs. Let's go point by point. Listen carefully. Cooperatives. Point number one. What do you mean by a cooperative? Cooperative means it is a group of 10 or more than 10 people who are above the age of 18 years who have come together to achieve a common objective. I'll repeat the definition. Listen to me carefully. What is a cooperative? It is a group of 10 or more than 10 people above the age of 18 years who have come together to achieve a common objective. For example, have you heard of cooperatives in the milk sector? Let me know. Have you heard of cooperatives in the milk sector? Best example, Amul. At the best example for milk cooperative, and again, please understand, there are a lot of cooperatives in India in the milk sector. And very recently was there discussion regarding Amul versus Nandini. Yes or no? Amul versus Nandini. Nandini is a cooperative, milk cooperative from Karnataka. Amul is a milk cooperative from Gujarat. In fact, there's a milk cooperative in Kerala. Milk cooperative is there in Tamil Nadu also. So milk cooperative is a very, very common occurrence in India. Right? So milk cooperative, 10 or more people will come together to achieve a common objective. What is a common objective? Whoever is producing milk, we should provide them with the market. We should be basically purchasing from them, providing them with good returns. That's a whole idea. What about housing cooperatives? Have you heard of housing cooperatives? What about cooperatives in sugar sector? What about cooperatives in banking sector? So there are a lot of cooperatives. Please remember this. Throughout India, in multiple sectors, there are a lot of cooperatives. But cooperative logic is very simple here. More 10 or more than 10 people will come together. They'll come together and they will have a common objective. And all of them are above the age of 18 years. That is the point number one. Point number two, cooperatives can be formed in a single state, operate in a single state. That is, in only one state, they will operate. And second, cooperatives can be formed which will not just operate in one state, they will start operating in multiple states. Multi-state. Okay, single state cooperative, multi-state cooperative. And whenever you come across single state or multi-state cooperative, what is the importance of it? Whenever you talk about single state cooperative, it is coming under the supervision of the same state government. It is coming under the supervision of same state government. Whereas multi-state cooperative, it will come under the supervision and regulation of central government. Remember this, right? Single state cooperative, right? Same state government. Multi-state cooperative, central government. Whether it is a central government or state government, what they generally do is they will appoint a person, and there is an office, there is an official registrar of cooperative societies. Registrar of cooperative societies. Please remember, even at the central level, it is the registrar of cooperative societies. In short, RCS. Register of cooperative societies. Registration is done, right? The register of cooperative societies will ensure, right, elections are conducted, etc., etc. Now that is one more very important point. Third very important point, come to banking sector. Come to banking sector. In case of banking sector, there are cooperative banks. Okay, we have cooperative banks. The cooperative banks can be divided into two parts, urban cooperatives as well as rural cooperatives. Urban cooperatives can be present in a single state. can be present in multi-state. These can be scheduled banks as well as non-scheduled banks. Have you heard of scheduled as well as non-scheduled? Please do let me know. Last week. Okay, so urban cooperatives can be single state, multi-state. They can be scheduled as well as non-scheduled cooperative banks. And what is the basic idea? These urban cooperative banks will function just like any other bank in India. The urban cooperative banks will function just like any other bank in India. They will collect a deposit, they will give you loans, they will have locker facility, they will give you gold loans, etc. etc. Just like any bank. On the other side, rural cooperatives are divided into two parts, right? One basically based on whether they will provide short-term loans or long-term loans to agriculture sector. Israel, I'll repeat it. Whether these banks are providing short-term loans or long-term loans, we have two parts or two pillar classification. Now, what do you mean by short-term, long-term? We'll discuss that when I take up agriculture credit. Please don't worry. It is based on for what duration the loans are given. In fact, we have short-term, medium-term, as well as long-term. So in the context of rural cooperatives, these are classified whether they will provide short or medium term loans or long term loans. Right? If they are providing short term loans, again there are three parts to that. One is called as a state cooperative bank. At the top, we have SCB, State Cooperative Bank. Below the State Cooperative Bank, we have DCCBs, District Central Cooperative Banks. And below DCCBs, we have Primary Agriculture Credit Societies. Please look at the third pillar, important. Primary Agriculture Credit Societies. Please tell me this particular part. I'll use a different color now. This part. Everybody, please read the name and tell me, is it a bank? I've asked this question earlier also. Is it a bank? No, this is not a bank. This is not a bank. Please remember this. These are societies. These are registered as societies with the state government or with the central government. These are not banks. That is the precise reason. If you see the operations of PSEs, if you look at the operation of PSEs, no doubt they will collect a deposit, give loans, but that is not the only thing that they do. Is it okay? Right? That is not the only thing that they do. They will also provide fertilizers. Provide in the sense they are also involved in selling of fertilizers. They're also involved in selling of seeds to the farmers. They will provide warehousing capacity, warehousing facilities in villages, etc. So they are involved in this kind of activity, that is a collection of money and giving loans. But no, right? They are not just doing only this, right? They will do many other activities such as selling seeds, selling fertilizers, right? Giving rental warehousing, etc. But they are not banks, right? They are not at all banks. Come to the other side, right? Long-term loans. We have two institutions here, long-term loans. One is a State Cooperative Agriculture Rural Development Bank. And below that, we have a Primary Cooperative Agriculture and Rural Development Bank. Right? S card B and P card B. These are two-tier structure, two-level structure, which will provide long-term loans. Long-term loans, right? Basically to agriculture sector. So this is the classification of cooperatives. All of you okay? This is a classification. Should you remember it? My recommendation is that by heart it. My recommendation is that please by heart it. Why? Lot of discussion is happening regarding cooperatives in India. For example, very recently in the newspaper, have you come across Ministry of Cooperation in India? Correct? Ministry of Cooperation in India. Right? There is a minister also for cooperation. If you are reading newspapers, you will know. Mr. Amit Shah is the Minister of Cooperation for India. Right? Very recently formed. Very recently formed ministry. Right? And now they are basically promoting that these primary agriculture credit societies, PSEs, rather than providing these kind of services such as selling seeds, etc., there is one more type of system called as common service centers. Have you heard of this? CSE, common service centers, CSEs. Have you heard of this? If you are from villages or lower tier cities, in many of these places, you will have common service centers, CSCs. What is the role of common service centers? Common service centers will provide lot of services such as right let's say if you want to apply for right PM Kisan, you can approach common service centers. If you want to book certain railway tickets, you can approach common service centers. You want to apply for change in Aadhaar, you can approach common service centers. In simple terms, these are centers which will provide you digital services, right? These are the centers which will provide you digital services. Because farmer, I hope you understand this. You are talking about a farmer doesn't understand how to apply for a loan. Farmer doesn't understand how to book a railway ticket. Farmer doesn't, again, in the sense using digital methods. I'm not minimizing anybody, or I'm not trying to defame anybody, right? But argument is lot of digital technology is available. You cannot expect farmers to understand all of these methods. So to assist them, and trust me, they will charge a certain amount of money, right? If you have one in your village, if you have one in your place, right, go there, check what kind of services they will provide. They will provide all these services, but they will charge money for it. Is it okay? Right, so that is basically the argument. So now government of India says, why not allow primary agriculture credit societies also to provide services just like a common service center, so that they will also be able to generate lot of revenues in India. Right, so this is basically the model. Very often the concept of cooperatives is there in the newspaper, please read it. But let me go beyond the structure of cooperatives. Again, I'll talk about banking sector here. In case of banking sector, in 1966, the government of India amended Banking Regulation Act. It is there here. In 1966, and very recently also government of India has amended it. I'll go to that. Just give me a minute. Government of India, 1966, back in 1966, amended Banking Regulation Act of 1949 and stated that all those particular banks, cooperatives, I'm talking about cooperatives, all those banks with a paid up share capital of more than 1 lakh will be brought under the purview of Banking Regulation Act. Now, many of you will ask me, what is the importance of it? What is paid up share capital, right, etc. Let's go point by point. Point number one. Whenever any institution is brought under Banking Regulation Act, it simply means it will come under the regulation of Reserve Bank of India. Anybody has a problem with this? I'll repeat the statement. Whenever any institution is brought under the Banking Regulation Act of 1949, it simply means that it will come under the regulation of Reserve Bank of India. Now, please tell me, can I say based on this, cooperative banks will come under the regulation of RBI? Correct? Cooperative banks will be regulated by RBI. In fact, because the cooperatives are specifically there in rural part, right? We want to promote villages. RBI, there is one more All India Financial Institute, NABARD. There is one more All India Financial Institute, NABARD. NABARD plays a lot of role in providing access to capital for all of these rural cooperatives, because NABARD is especially focused on agriculture sector, and rural cooperatives are also focused on agriculture sector. So that is the precise reason. Whenever I said whenever a bank or any institution is brought under Banking Regulation Act, it simply means it will be regulated by Reserve Bank of India. Please remember, that is point number one. Point number two, what is this concept of paid up share capital? What is this idea of a paid up share capital? Paid up share capital simply means how much money has been collected by the company by issuing shares and collecting money. I'll repeat it. How much is the money collected by the company by issuing shares, selling shares to the investors and collecting money? For example, let me take a very simple example here. All of you heard of Adani company? Yes or no? All of you heard of Adani company? Anybody in the classroom who says, sir, what is this Adani company? I've not heard of it. So Adani company, let's say will sell shares to you, will collect money from you. That money which has been collected by selling shares to you is called as paid up capital. All of you okay with this? I'll repeat it again. The company, right, or anybody, even for that matter, cooperative banks, they will issue shares, collect money, right, from the people who have purchased the shares. That money is called as a paid up capital. And in case of cooperatives, please understand certain very important points regarding cooperatives. In case of cooperatives, the members are shareholders. The members who will start the cooperative, who are the members of cooperative, these are nothing but shareholders. And one more very important point. In a company, right, I'll take a parallel example here, understand this carefully. In a company, let's say out of 100 shares, if you have 70 shares, a company totally has 100 shares, you have 70 shares, can I say you are the majority owner of the company? All of you, please let me know. Right? We'll take a break. Some of you are worried about break. We'll take a break after this. Please don't worry. A company has issued only 100 shares. You are the owner of 70 shares. Can I say you are 70% owner of the company? And you will be taking majority of the decisions for the company. But in cooperatives, that does not happen. Remember this. In cooperatives, that doesn't happen. Right? Cooperatives, there is a concept called as one member, one vote. In cooperatives, it is one member, one vote. One member, one vote. That's it. If 10 people will come together and start a cooperative, all the 10 people will have only one vote. Does it make sense to you? Right. So remember the differences. Remember the importance also. Right. So that's the reason in cooperatives, every member of a cooperative will carry only one vote. And some of you might be worried, sir, what is the importance of voting in cooperative? Please do let me know. Have you heard of elections for cooperatives? Think of it and please do let me know. Have you heard of elections for cooperatives? Sugar cooperatives conduct elections. Textile cooperatives conduct elections. Milk cooperatives conduct elections. What is the reason? What is the reason? Let's say there are 1,000 members. Understand the logic behind it. Automatically all of you will say, yes sir, it makes perfect sense. There are 1,000 members. All the 1,000 members will have one vote. Do you think everyday discussion, everyday decision making is possible by including all the 1,000 members? Let me know, does it make sense to you? Is it practical? Right? And I'm taking a very small number, by the way, 1,000. Right? In some of the cooperatives, lakhs of members are there. So in case of lakhs of members, right, is it feasible? Right? Is it logical to bring all the lakhs of people together every day and conduct deliberations, conduct discussions? That's not possible. So what will happen? Elections are conducted. What will happen? Elections are conducted. That is where the importance of one member, one vote will come into picture. Right? So elections are conducted. They will have board of directors. They will have board of directors. Right? The board of directors will make day-to-day decisions, will take care of operations of cooperative. But here itself, understand the problem. Understand the problem here itself. What if you elect a person who doesn't have any knowledge of banking sector? Possible? Many instances are there. Right? What if, right, for example, how some of you will ask, how is that possible, sir? My dear, lot of these politicians, again, don't make it political, just to make you understand, I'm telling you this. Lot of these politicians have come from cooperative sector only. First they will win elections in cooperatives, then they will right, basically compete in MLA elections or municipality, then MLA, then MP. Right? So again, don't worry about all of this. This is all of a political angle. But don't you think in certain regions where cooperatives are there, the relatives of these influential people, politicians, will stand for cooperative elections? Yes or not? Right? And again, check it. In your own time, you check it, you will realize absolutely this is correct. Right? Very influential people in that region, politicians, right, their sons, daughters, wives, or a distant relative, etc., they will stand for cooperative elections, they will win these elections. But what is the problem? Problem is that what if the person who has been elected does not have any knowledge of banking sector? He is not an expert in the banking sector. So don't you think you are electing and sending people, that is a board of directors, they don't have any expertise in the banking. They are collecting deposits, cooperative bank. They are collecting the deposits and they are giving loans, but they don't have any kind of expertise. They don't have any kind of expertise. Is it not dangerous to banks? Cooperative banks, by the way. Do you think the same thing will happen in public sector banks? Think of it. Do you think the same thing happens in a public sector bank? Do you think same thing happens in a private sector bank? Absolutely no. Absolutely no. No elections. Right, in public sector banks or private sector banks, elections are not conducted. Right, but in case of cooperative banks, elections are conducted. So understand the problem here. There is a problem associated with cooperative banks, which is called as dual regulation. Dual regulation. What is this issue of a dual regulation? I said earlier, by amending Banking Regulation Act in 1966, many of these cooperatives were brought under the regulation of Reserve Bank of India. But Reserve Bank of India is concerned that part of the banking activity of cooperative bank, I'm regulating the banking aspect. But the cooperative banks, elections are conducted. Cooperative banks board of directors is elected. So how can I manage them? How can I control what they do? I can tell them keep CRR, keep SLR, I can tell that. But can I guarantee that, right? Let's say a chairman or let's say a board of director member will not give loan to a company owned by themselves. Can I guarantee that they will not give a loan to a bad borrower? Can I guarantee that they will not give loan to their friend only? No guarantee. Right, so I hope you understand there's a lot of problem because of this dual regulation. Because on one side, can I say cooperatives will come under regulation of state government. All of you will agree, cooperatives will come under the regulation of state government, and cooperative bank will come under regulation of RBI. So can I say there is a dual regulatory issue here? There is a dual regulatory issue. In order to address this only, in order to address this itself, Government of India amended Banking Regulation Act in 2020. We'll discuss this. After this, we'll take a break. Listen carefully. Government of India amended Banking Regulation Act of 2020 and has given lot of powers now, lot of powers to Reserve Bank of India. It is the solution which has been proposed by Government of India, which has come into force now as an answer to the issue of dual regulation. How? Point number one. Reserve Bank of India now has the powers over the management of cooperative banks. Look at the point here. It has the powers over the management of the cooperative banks, and in the powers that have been given to RBI, now they will have the right to impose a new structure which is called as Board of Management. As per the process prescribed by RBI, as per the proposal given by RBI, all these cooperative banks should have board of management. And in the board of management, and again please understand, board of directors is different, elections are conducted, board of management is different. In the board of management, RBI says there should be at least 5 members and at the most 12 members. At least 5 and at the most 12 members. And RBI says, I want the cooperative banks to appoint experts as a part of board of management. RBI will simply tell the cooperative bank, do not appoint anyone into the board of management, appoint experts. And if RBI feels that a person who has been appointed as a board of management member is not an expert, then RBI will simply ask cooperative bank to remove the board of management member. To simply remove that particular member, right? RBI will not allow such appointments to happen. It has to be expert in certain field. For example, let's say there is an expert in agriculture sector loans. They can be appointed. There is an expert who has a lot of exposure to retail banking. They can be appointed. There is an expert in case of, let's say, the collection of deposits, right? He's an expert in that, right? They can be appointed. So they will have to be experts in certain areas in the banking sector. Otherwise, RBI will not allow such appointments in the board of management. Now, what is the role of board of management? The board of management will basically oversee the banking functions of cooperative bank. Is it okay? It will basically assist and oversee the board of directors in banking operations of the cooperative bank. Right? That is basically the role of the board of management. In addition to this, government also says now the cooperative banks can go to the market, issue shares in the market, collect money. Until now, it was not allowed. Please understand. Until now, it was not allowed. Now, the cooperative banks can go to the market, issue shares. You can purchase the shares. I can purchase the shares. Of course, if the cooperative banks will issue them. So the cooperative banks should take the approval of RBI. They can go to the market, issue different types of shares in the market. You can purchase those shares. For example, please understand, there are shares such as preference shares, right? There is a share called as equity share. There is a type of share called as a preference share. Now we will discuss what is equity, what is preference. We'll discuss what are the types of shares, why these are called as equity, why this is called as preference. We'll understand that when I take a financial market in detail. But right now, simply understand, cooperative banks with the approval of RBI can go to the market, issue bonds, issue different types of shares such as preference and equity, and raise capital. Reserve Bank also has been given the power to simply supersede. Supersede means take over the functions of board of directors. If RBI feels a board of directors of a cooperative bank is not working correctly, it will simply take over the management of the cooperative bank under itself. Superseding means that take over the management. And finally, Reserve Bank, with the approval of central government, can merge these cooperative banks. Can basically force amalgamation. Amalgamation means joining. They can force a cooperative bank to merge, or they can propose voluntary amalgamation of these cooperative banks. Okay, but of course they will have to first take the approval of the central government. Right, so these are certain very important powers that have been given to Reserve Bank of India now by amending Banking Regulation Act of 1949 in the year 2020. And the question on this particular amendment has already been asked by UPSC, so please be very careful. Done? Okay, so next concept is RRB, but before that, let me take a break. And before that, if you have got any kind of questions, please do let me know. I'll resolve them, then we can take a break. Okay. What is CSC? Is it kind of a service? A common service center. It is a center. It is a place. Right? It's just like a shop where they will provide services, different types of digital services to you. That is called as a common service center. Okay. How many members are there in the board of directors? Again, it will vary. Don't worry. What is the last slide? What is a bad bank? I'll repeat it. Bad bank is an institution which will simply take over the bad loans. Bad loans is NPAs from the banking institutions. They will basically take it. Okay. They will purchase it. Okay. What are the functions of board of management? Board of management, I've told you, whatever are the banking functions, cooperative banks are banks essentially. So whatever are the banking functions, they will assist a board of directors, because board of directors may or may not have experts in the banking sector, but board of management will definitely have experts. Okay. When will the class get over? 8:30. What is twin balance sheet? Twin balance sheet simply means there are two balance sheets which are under pressure. Twin means two. Balance sheet of the banking sector, balance sheet of the industries. Both are under pressure, hence called as twin balance sheet problem. IBC full form, Insolvency and Bankruptcy Code. It is there in the first slide only. It is there in the first slide. IBC is Insolvency and Bankruptcy Code. Okay. Okay, done. Let me take a break now. Let me take a break. Okay, before that, sir, if a person A takes a loan from a particular bank, but before repaying, the loan person A died, what happened to the loan? Whatever is the security, they will confiscate it. Okay. Okay, so let me take a break now. Time is 8:55. We'll restart the discussion at 7:10. We'll restart the discussion at 7:10 p.m. Okay. Okay, welcome back. Am I audible? Please do let me know. Am I audible? It's 7:10. Those are asking what's the time? 7:10 p.m. So let's start. Let's start. So next concept, regional rural banks. And one more answer to those students who are asking, sir, how many more concepts are there? How many is left out, etc. Couple of more concepts. You're at the fag end of the discussion. Don't worry. Only small concepts are there now. Regional rural banks, small finance bank, right? Or for that matter, concept of NABFID. Small concepts are there. Let's finish off. And all of them are from current affairs. All of these are from current affairs. Right, let's start. RRB, Regional Rural Bank. Right, RRB is more of a static concept. Don't ask me, sir, RRB, is it a current affairs? No, it's a static concept. What is this RRB? RRB stands for Regional Rural Bank. Point number one, regional, right, rural bank. Now, what is this idea of a regional rural bank? Please understand, in 1970s, Government of India, Government of India set up a committee, Narsimham Committee, and they asked Narsimham Committee, we want to promote more of institutional lending in villages, in the rural parts of India. As usual, in cities, a lot of banks are there. We want to ensure in villages more and more, right, banks will be opened up, more and more institutional loans will be given. What should be done? Rural credit. How do we promote more access in a rural market for credit? That is the reason there was a recommendation. There was a recommendation to have a new type of a bank called as a regional rural bank. Understand the logic behind it, and don't tell, right, sir, there is already a public sector bank, there's a private sector bank, etc. We have nationalized in 1970, right? Do you remember that the first round of nationalization was in 1970, second round of nationalization in 1980, and you're talking about 1970s, right? So at that particular point of time, most of the banking infrastructure was present in urban part of India. Very little was present in a rural part of India. But the problem was, lot of people, that is a lot of population, even today for that matter, resides in villages, resides in right, the rural part of India. So we want to ensure loans will go to that population, loans will go to, right, agriculture sector, loans will go to small industries which are present in villages, etc. And that is the precise reason why there was a recommendation to have regional rural bank. The whole idea of opening a regional rural bank was that these RRBs will not open their branches in more than one or two districts. Right, I'll repeat it. These RRBs, I'm talking about the original idea, because over a period of time, multiple RRBs have been merged. All of these things have happened. What was the original idea? These RRBs will not open branches beyond one or two districts. They will focus only on one or two districts. Why the focus should be there on one or two districts? So that we will try to target more and more population within the districts, that is specifically targeting rural population. With that objective, Government of India, based on the recommendation of Narsimham Committee, started establishing RRBs or promoting RRBs with the passage of RRB Act. Government passed RRB Act and started promoting growth in RRBs. So what were the objectives of RRBs? One, to promote the development of a rural economy, to provide a credit to agriculture sector as well as allied activity. What do you mean by allied activity? Right, fisheries, right, or let's say the promotion of let's say beekeeping. All of these are called as allied activities. So to provide credit to agriculture sector as well as allied activities of agriculture sector. Next, to promote village industries. To promote village industries, provide loans to even village industries. To reduce the dependency of weaker sections on money lenders. Understand what is the concept of money lender? Money lender means even in today villages and in urban centers also this model is available now. Certain people who have lot of money will give loan for 1 day, for 7 days, for 3 days, but at a very, very high rate of interest. Have you come across this? Money lending, right? Individuals who have got lot of money, not regulated, completely not regulated, they will give you loan, but at a very, very high rate of interest. Very, very high rate of interest. Just to quote Reserve Bank of India's report, if you take a loan from a bank, if you take a loan from a bank, rate of interest generally is in the range of 8 to 10%. It can be much lower than that also. For example, agriculture loans. Agriculture loans are generally priced at around 7 to 9%, and upon that, interest subvention is there. But if you take a loan from a money lender, if you take a loan from money lender, or let's say, right, your friends and families, relatives, etc., RBI says rate of interest applicable is in the range of 24% to 36%. Rate of interest is in the range of 24% to 36%. That's a very, very high rate of interest. Very, very high rate of interest. Right? Not sustainable. So the argument is, why not ensure that even in villages, certain institutions will be set up which will provide the loans to weaker sections, poor people, so that the dependency on such borrowers will come down. Okay, right. So to reduce dependency of weaker sections on money lenders, and to make backward as well as tribal areas economically better by opening new branches, giving them small amount of loans, promoting growth in those areas, promoting development in those areas, etc. So with these objectives, we have promoted the model of regional rural banks. But let me go to the next point. Right? Let me go to the next point here. Whenever you talk about RRBs, please remember this. Government of India was not in a position to set up their own RRBs. I hope you understand my point here. I'll repeat it. Government of India was not in a position to set up their own RRBs because they already have purchased a lot of public sector banks. So complete investment establishing RRBs, right, very, very cumbersome, very lengthy process. So what government did was, they came together with banks, already existing banks. The government of India, state government, and existing banks, such as public sector banks, all the three came together, invested together, and started establishing RRBs. Is the point okay with all of you? Please do let me know. I'll repeat it. Government of India had already conducted nationalization. Means what? Government of India was owning lot of banks in India now. Rather than again investing completely to open RRBs, Government of India, state government, and certain banks such as public sector banks, all the three came together, invested money to start RRBs in India. I'll give you certain examples. Have a look at these examples. Do not by heart. Please do not by heart. It is of no importance to you. UPSC will not ask you examples of RRBs. These are some of the examples of regional rural banks in India. There are some of the examples. Now, sir, what kind of banks came together with the center and state? For example, State Bank of India. State Bank of India, along with the central government as well as the state government, have established multiple RRBs. Right? For example, as of 31st March 2022, State Bank of India had ownership in 14 RRBs. State Bank of India has ownership in 14 RRBs. And Punjab National Bank, PNB stands for Punjab National Bank, another public sector bank. So Punjab National Bank has ownership in some of these RRBs. My point is very simple here. Do not by heart the list. Do not by heart the list. List does not have any importance for UPSC. Logic is simple here, that the banks which were already there, along with the central government and the state government, came together to set up regional rural banks. Now, how much was the ownership? How much was the investment and ownership with the center? How much is with the private? Sorry, how much is there with the banks? How much is there with the state government? 50%, 35%, and 15%. Please remember this number: 50%, 35% and 15%, right? So this is how much is owned between center, state, and right the banks in RRBs. For example, take any RRB. Central government will have 50% ownership in that. The bank will have right any particular bank. For example, in case of Andhra Pradesh Gramin Vikas Bank, it is right 35% owned by State Bank of India, and the Andhra Pradesh government will have 15% ownership in this particular bank. And next important point, whatever bank has invested in this RRB, this bank will be referred to as sponsor bank. Whatever bank has invested in this particular RRB, it will be referred to as a sponsor bank. Right? So these are certain important points regarding RRBs. Now let's look at features. Right? What are the features of RRBs? One, these will be sponsored by commercial banks. Right? RRBs are sponsored by commercial banks. Would cover generally one or two districts. This was the original model. I hope you understand. This was the original model. Over a period of time, the model has kept on changing because multiple RRBs have been merged together. Originally, the argument was it will cover one or two districts maximum. Third, management of this particular RRB will be carried out. I repeat, management of this RRB will be carried out by a chairman, and the chairman will be appointed by the sponsoring bank. And finally, RRBs were required to have a PSL of 75%. RRBs were required to have a PSL, priority sector lending, of 75%. Right? So these are certain very important features regarding regional rural banks. Having said so, what are the concerns or issues? What are the concerns or issues regarding the functioning of RRBs in India? Point number one, RRBs have incurred huge amount of NPAs which have led to losses. Anybody has a problem with this? Just like any bank, RRBs have accumulated lot of NPAs which have led to lot of losses for RRBs. Point number two, the cost of operations for RRBs also have increased by a lot for a very simple reason, because the target was one or the two districts, one or maximum two districts. Lot of branches were opened for these RRBs or by these RRBs in these districts, as a result of which cost of operations has increased. Right, the manpower requirement has increased, real estate requirement, lending on that has increased, etc. But on the other hand, the RRBs are competing with any other public sector bank as well as private sector bank. And the customers especially, either right, you talk about villages or urban cities, doesn't matter. Customers would prefer to keep more and more deposits in a nationalized bank compared to RRBs. So RRBs on one side are struggling to collect more and more deposit. On the other side, they've opened lot of branches, as a result of which cost of operations has increased. And third, just like any bank, it has accumulated lot of NPAs and the losses also have increased. Right. So these are some of the concerns or issues right, which are associated with the functioning of RRBs, regional rural banks, in the Indian economy. Okay. Can we go forward now? Any other issue? Can we go forward? Okay. Right, no issues. Nobody has asked any question. Let me go forward. Now, next concept I want to discuss, current affairs. Right, current affairs, NABFID. Right, what is this concept of NABFID? National Bank for Financing Infrastructure Development. National Bank for Financing Infrastructure Development, NABFID. Now, before I go forward, there is one student who says, sir, your voice is breaking. My dear, either hit fix audio button or hit refresh button. One of the two things. One of the two things should fix the issue. Please try it out. Okay, now let me go forward. Before we discuss NABFID, please tell me, do you remember the concept of development banks? Let me know. Do you remember the concept of development banks? Right? What is the concept of a development bank? Development banks are not like a commercial bank. Commercial banks will collect deposits from the customers and will give loans. That is a commercial bank. Whereas development banks will provide loans for development such as infrastructure. Is it okay? They will provide loans for development such as infrastructure, right? So that is a basic idea of a development bank. And second point, earlier we have discussed there is a huge requirement for providing infrastructure loans in India. This is the second point, right? We have discussed it, we are consolidating. There's a huge requirement of providing infrastructure loans. And infrastructure loans, right, have two very important features. One, these are very long term loans, not short term, long term loans. And point number two, the value of the loans is also very, very high. And because these are long term loans and the value of the loans is very high, don't you think banks in India will face the issue of asset liability mismatch? Correct? The banks in India will face the issue of asset liability mismatch, ALM. So what is the solution then? What is the solution? The solution is that government of India has come out with a new model of a development bank, which is called as a National Bank for Financing Infrastructure Development, NABFID. What is the role of NABFID? How it will help in promotion of infrastructure in India? Let's try and understand. Point number one, NABFID has been set up by Government of India. Right now, 100% of NABFID is owned by Government of India. Right now, 100% of it is owned by Government of India. But over a period of time, Government of India says, I will sell the ownership of it. I will reduce my ownership to 26%. When they are going to do that, right, to whom they are going to sell the ownership, that is not clear. Right now, what is clear is 100% of NABFID is there with the government. That is point number two. Point number three, what is the role of NABFID? What is the role of NABFID? One, it should be very clear to you. NABFID will provide long-term loans for infrastructure development. NABFID will provide long-term loans, large value loans, long-term loans for infrastructure projects in India. That is the first very important objective of NABFID. Now, many of you will ask me, sir, how are they going to provide these loans? From where is the NABFID going to get the money? NABFID can go to the bond market. Do you remember the concept of a bond? Let me know. Do you remember the concept of bond? Right? Bonds. So NABFID is allowed to go to the bond market, issue long-term bonds, collect money, and give it as a loan. That is allowed. Or else NABFID is also allowed to approach RBI, borrow from RBI. Right? So there are different ways through which NABFID can get the money and provide long-term loans. Right? So that is basically another very important point regarding NABFID. Next, it's not just that NABFID will give loans, NABFID will also promote private sector investment. Lot of investors will be promoted by NABFID to invest in the India's infrastructure. NABFID will provide consultancy services for infrastructure growth. If there is an issue, if there is right a issue regarding one of the infrastructure projects, right, multiple government authorities are involved, there is a negotiation that is happening or there is a dispute that is there regarding multiple government authorities, then NABFID will try to mediate, will try to hold negotiations with all of these government authorities, try to resolve the issue and right basically promote the development of infrastructure projects. So these are some of the functions. These are some of the functions, right, of the model of NABFID that has been proposed and set up by Government of India, right, very recently. Very recently, this has started operating in India. Because understand this, NABFID was proposed. It was basically introduced in the form of a bill. Bill became an act. Then NABFID has been set up. And very recently, have you heard of Mr. KV Kamath? Let me know how many of you heard of Mr. KV Kamath, very, very famous banker in India. Very, very famous banker, by the way, Mr. KV Kamath. KV Kamath has been appointed as the chairman for NABFID. right? He has been appointed as the chairman of NABFID, right? Chairman of NABFID. Again, when I'm talking about all of these particular points, please understand, suddenly UPSC can throw these kind of points, right? I hope you understand. Do not try to just limit your reading to only a textbook. My recommendation is that please do not stick to only one textbook. Try to develop all of these current affairs points as well, right? And where will you get all of these points? Newspapers. Very simple. Newspapers. KV Kamath was the chairman for ICICI Bank. At least have you heard of ICICI Bank? Yes or no? ICICI Bank. Earlier, right, Mr. KV Kamath was the chairman, right, or chairman CEO of ICICI Bank. Right, he finished his tenure in ICICI Bank, went to New Development Bank, BRICS Bank. Again, he is back in India now. He is the chairman for NABFID now, National Bank for Financing Infrastructure Development. And by the way, this is an advice. Just a minute. I'll take a minute. Just take a detour and come back to this. This is my advice to you. If you people are interested, right? No, I cannot guarantee that this is going to benefit for UPSC exams in answer writing, or let's say UPSC is going to ask questions on that. But if you people are interested in reading books, try to go beyond, right, these textbooks. This is my recommendation to you. Try to go beyond these particular textbooks. Don't just stick to the textbooks which are there, right? Polity is this book, economics is this book, only read that. No, my recommendation, go beyond that. For example, right, for example, how many of you have heard of Mr. SC Garg? How many of you heard of Mr. SC Garg? Right? If you're an IAS aspirant, you should know by the way. You should know him. SC Garg is basically an expert, right? Retired as one of the secretaries of Government of India, IAS officer by the way, right? Subhash Chandra Garg. SC Garg is Subhash Chandra Garg. SC Garg very recently has written two wonderful books. Two wonderful books. I've read first one completely, read half of the second book. One is 5 trillion dream. 5 trillion dream. Again, please understand, if you ask me, sir, is it mandatory for me to read this book? Absolutely no. Absolutely no. Even if you don't read this book, you can pass UPSC. I can guarantee that. But if you're interested, this is my advice to you. Go beyond just the textbooks like this. He has written 5 trillion dream. Very nice book. Very nice book. Lot of recommendations for policies you can get from here. And second, he has written V2 Make Policy. V2 Make Policy. This was released, or this has been released very, very recently, right? V2 Make Policy. This was released very, very recently, and that is also a very good book. Very good book. Again, sir, any other book? Yes, there is a huge list. Huge list is there, right? I'll try to give you, right, couple of more titles as we go on when we start discussing more right chapters. But again, please understand, it is an advice. Is it compulsory, sir? No, absolutely not compulsory. Sir, if I don't read this, will I fail UPSC? Absolutely no. If you are interested, underline the term interested. If you are interested and you want to get more knowledge, not what is there in the book, then I would recommend it. Right? Then I would recommend it. And before you start, right, because I've told you these titles, before you start searching and ordering in Amazon, be very, very careful. Both are very large books. Both are very large books, right? Both are, just a second. So it is not 5 trillion, it is 10 trillion. Okay, 10 trillion. Whatever the title is there, it is written by Subhash Chandra Garg. Right? You'll get the, based on the title, yes, it is 10 trillion dream. It is written by SC Garg. Right? Don't worry, it is written by SC Garg only. But I would recommend, if you're interested, read them. If you're interested, okay. But again, don't by heart it because it is there in the slide. You will get in annotations. Don't start by hearting it. Don't start by hearting. For example, there is one more book, right? One more book, Accidental India. This I recommend in every batch. I recommend this particular book in every batch. Accidental India, right, is written by one more of a journalist, basically Iyer, right? Shankar Iyer. Accidental India. Very nice book. right? It discusses a lot of aspects related to Indian economy reforms that have been implemented by the government in the past. In the past, right? What happened? Why did they introduce? Can I give you a very recent current affairs connection? All of you heard of Mr. M.S. Swaminathan? Let me know. All of you have heard of Mr. M.S. Swaminathan? Anybody in the classroom who says, no, sir, I've not heard of Mr. M.S. Swaminathan? I would simply say, my dear, please wake up then. If you have not heard of Mr. M.S. Swaminathan, please wake up. You are very, very poor in your current affairs. Very recently, Mr. M.S. Swaminathan passed away. Now, don't you think because Mr. M.S. Swaminathan passed away, next year, suddenly question can be asked in the mains on green revolution? Yes or no? Suddenly, UPC can ask you a question about green revolution, right? So if you read this particular book, Accidental India, there's a chapter on green revolution. There is a chapter on green revolution. Around 40 pages, there's a chapter on green revolution. What happened, right? Why did we import it? What is PL 480? All of that data you will get in this book. But having said so, I'm not saying no other book will give you this data. Please understand my point also. I've not been paid. I'm not sponsoring anything, right? Nothing. I'm just trying to impart certain knowledge to you. If you read, good. If you don't read, no loss for you. Absolutely no loss. Okay, come back to this. Come back to the discussion. Okay, come back to the discussion. What is the critical evaluation of NABFID? Right? What is the critical evaluation? What is the benefit? What is the concern or issues? Let's start with the benefits or advantages. First one, it will promote a lot of investment in infrastructure development. And whenever you talk about infrastructure development and growth, don't you think it will promote a multiplier effect in India? It will promote a virtuous cycle in the economy. Burden on the banking sector to provide infrastructure loans will be reduced. They will not have to face a more or higher issue of asset liability mismatch. So these are some of the benefits that NARCL is expected to provide to the banking sector or to the overall economy. Having said so, there are certain concerns or issues with the model. There are certain concerns or issues. What are the concerns or issues? Point number one, I said NARCL is allowed to issue bonds, collect money, and give loans. But for that, bond market is not very well developed in India. Is it okay? Bond market is not very well developed. I'm not saying it is not at all developed. I'm saying bond market in India is not very well developed. Right? How? Why? What has the government of India done? Is there any way forward? We'll discuss all of it. Please don't worry. We'll discuss bond market separately in the financial market. So point number one, concern is simple. The NABFID is supposed to issue bonds, collect money, and give loans. But the bond market is not very well developed. So don't you think there might be limitation? There might be a limitation on how much money can be raised by NABFID through the bond market. Point number two, NABFID might provide loans for the development of infrastructure, but there are other concerns related to growth of infrastructure in India. For example, even today, land acquisition is not easy in India. I'll repeat, even today, land acquisition is not at all easy. Very, very difficult to acquire a clean land without any disputes. There will be one or the other disputes, there will be one or the other oppositions related to land acquisition. Land acquisition is not easy. So NABFID will provide loan, but what about other concerns? Because you want the infrastructure to grow, there are many other concerns such as land acquisition issue. And third one, third one, what about government clearances? There will be multiple authorities which are supposed to provide clearances. What if they will delay providing clearances? What if a judiciary will come again, put a stop or let's say a pause on any of these infrastructure projects? So don't you think involvement of multiple authorities, there could be a delay, right? There could be opposition from the state government. There could be a pause on the project by judiciary. So there are certain concerns regarding whether this model will be successful in promoting infrastructure growth in India. And How this particular NABFID will find projects where risk is very high and where risk is very less? I'll repeat the statement. What do you mean by bankable infrastructure project? Whenever you develop a project, there will be issues, there will be risk associated with the project. So how NABFID will be able to find a project with very less amount of a risk or a project with a very high amount of a risk? Because the NABFID has to target the projects where risks are very less. Otherwise, they will take very high amount of risk by giving loans to very risky projects. So that is also one of the concern. How will they find out less risky projects or bankable infrastructure projects? Right. So that is also one more concern or issue associated with functioning of NABFID. Done. Can we go forward? Couple of more concepts, then we are done with banking. Okay, so small finance bank, payment bank, and I believe after that committees are there, and after that NBFC. Right, after that it is NBFC, non-banking financial companies. You will be done with the whole banking structure altogether. And let me go forward to the next model, small finance bank as well as payment bank. Now listen to me very carefully. Please listen to me very carefully. Before I start discussion about payment bank as well as small finance bank, I want you to understand one more concept which is called as financial inclusion. There's a concept called as financial inclusion. Now, what do you mean by financial inclusion? I'll start with the definition. Financial inclusion simply means providing financial services to the needy people in a cost effective manner. I will repeat the statement. What do you mean by financial inclusion? Providing financial services to the needy people in a cost effective manner. That is called as financial inclusion. Any example of this? I'll take the most famous example. All of you have heard of Pradhan Mantri Jan Dhan Yojana. Yes or no? It has completed 8 years very recently. Pradhan Mantri Jan Dhan Yojana. How does Pradhan Mantri Jan Dhan Yojana promote financial inclusion? What was the objective? How does it achieve financial inclusion? Imagine you have opened your own bank account. I'll repeat the statement, then you'll understand the pain behind opening the bank account. If you have opened your own bank account by going to a bank branch, the bank will ask you for write your documents. Correct? Again, I'm pretty sure lot of you would have not faced this problem. Why? You're working in a company has a tie up with the bank. The bank person will come to you, they will only say sign here, sign here, sign here, give me your 2 photos, and they will give you your bank account. Or else another category is there. Another category, what is the other category? Your parents have opened a bank account in your name. You don't have to worry, simply take the debit card, start swiping left, right and center. Third category, who will go to the bank branch, open the bank account. They will face this issue. What is the issue? First, they will have to submit documents. What documents? One document where your photo is very clear. Second document which will clearly say where your address is. Correct? One is your residential proof. Second one, your ID proof. And I'll tell you, trust me, right? Many of you would have faced this. Some of you will say, no, sir, because there is no issue with the documents. I'll tell you why. For example, let's say you'll produce one document where your name is written like this. I'm writing my name, by the way. Okay. Your name is like this. Sham S. Kagod. My name is, complete name is, by the way, Sham S. Kagod. One document will say Sham S. Kagod. You'll submit one more document which will say Sham SK. Sham SK. So one document Sham S. Kagod, another document Sham SK. Now the manager will simply tell you, sir, how do I know whether this K is Kagod only? Yes or no? How do I know this K is Kagod only? Or else, in some of the cases, right, your document will say SK Sham. In some of the cases, one document will say Sham SK, another document will say SK Sham. Manager will say, no, both are different. In one case, your name is there in the beginning. In another case, your name is there at the end. How do I know SK is same in both of them? No, both documents are not same. Tell me, have you come across this issue or not? Right? Or else your name is Sham SK Gold, you will have a bond, residential bond, right? That is rental agreement. In the rental agreement, right, your name is simply written Sham. Khalas. Manager says, no, 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 no. I will not accept this particular right document. Or else, right, you have all the documents correct you have. You will take photocopies, Xerox copy of these documents. You will submit it to the manager. The manager will look at the document and say, sir, you have deposited your PAN card copy. Photo is not clear. Correct? Your photo is not clear. So go run again 1 kilometer, half a kilometer, or 200 meter. Get me one more photocopy where it is very clear. Right? I've come across this because I worked as a bank manager. Trust me, and many of you would have faced the same issue. But what is the point? Even after all of this circus, if you open a bank account, the bank manager will tell you you will have to have a minimum balance of 1000 rupee. You will have to have a minimum balance of 1000 rupee. Now, for you, many of you, and from me, 1000 rupees is not a very big amount. Not a very big amount. But imagine this 1000 rupee minimum balance has to be maintained by one house, right? A person in one house whose only source of income is agriculture labor, agriculture wages. But think of it, for them, 1000 rupee could be a very, very large amount. So I hope you understand the argument here. Argument is simple. Bank accounts were earlier also present. Before Pradhan Mantri Jan Dhan Yojana also bank accounts were there. But the problem was accessibility. Problem was accessibility. Very difficult for a common man such as a very, very poor person to open and keep a minimum balance. So Government of India said, let's remove all of these hurdles. Let's remove all of these hurdles. The bank is asking you for multiple documents. Then under Pradhan Mantri Jan Dhan Yojana, not required. Only one document, your Aadhaar. Correct? What is required? Only your Aadhaar is required. Right? Submit that. More than sufficient. Right? Sir, ID proof, Aadhaar. Residential proof, Aadhaar. Photo ID, Aadhaar. Everything will be Aadhaar. Right? So I hope you understand. Only Aadhaar is sufficient. Now, minimum balance. You need to keep 1000 rupee minimum balance. That is a problem for you. I will remove that also. I'll remove that also. Right? When you open a Pradhan Mantri Jan Dhan Yojana account, you can have 0 rupees. 0 rupees in your account. Nothing wrong with that. Even if you keep 0 rupees, I will not impose any penalty on you. So now tell me, I will repeat the definition of financial inclusion. Does it make sense to you or not? Financial inclusion basically refers to a process wherein government will ensure financial services will reach the needy people in a cost effective manner. In a cost effective manner. That is very, very important. Can I give you one more example? RBI from 2006 has introduced the concept of banking correspondent. From 2006, RBI has introduced the concept of banking correspondent. What is this model of a banking correspondent? Imagine this is a place, a city, and surrounding the city, large number of small villages are there. Small villages are there surrounding the city. Now in the city, let's say there is a bank. For the customers from the village, don't you think it becomes very difficult to go all the way to the branch to withdraw money? Correct? To give a loan application, go all the way to the branch. To deposit money, go all the way to the branch. To withdraw money, go all the way to the branch. 6 kilometers, 8 kilometers, 10 kilometers, etc. That's a problem, by the way. You might not be facing that problem. Don't say, sir, that's not at all a problem for me. It is a fact. This is the fact, right? It's a problem for large number of villages in India, right? Large number of villages in India. And I'll tell you, the problem is not just the distance. The banks are working on working days. That is Monday, Tuesday, Wednesday, Thursday, Friday, and Saturday, assuming second Saturday, fourth Saturday, etc. Now, if a person is working for agriculture labor or as agriculture labor or Manrega wage worker, don't you think they will have to forego the wages, then travel all the way to the bank? All of you will understand the difficulty here. They will have to forego half a day or, right, let's say certain amount of wages, then travel all the way to the bank to deposit money, to withdraw money. That's a problem, by the way. That's a very big problem for these people. So what has RBI done? RBI has introduced a model called as banking correspondent. They are also referred to as a bank sathis. Remember this. They're also referred to as bank sathis, banking correspondent, bank sathi, different names are there. But logic is simple. This bank, which has accounts of these customers from different villages, in each of the village, generally, in each of the village, they will appoint one person. They will appoint one person or one institution which will provide basic banking services in the village itself. Is it okay? I'll repeat it again. They will appoint one person or one institution. For example, payment banks. Payment banks work as bank sathis. They will appoint one representative who will provide basic banking services to these customers. For example, what kind of basic banking services? Imagine I'm a Manrega worker. Wages have been deposited. My wages have been deposited into the bank account. I do not have to travel all the way to the bank account. I will go to the bank sati in the village itself. I will withdraw money from the bank sati. Is it okay? Right? I'll withdraw the money from the bank sati. I want to deposit money. I don't have to go all the way to the banking branch. I will go to the bank sati, right? Deposit money. They will give me a receipt. I want to submit a loan application form. I'll go to the bank sati, deposit it, or submit the loan application. I've received LPG subsidy. All of you are reading about LPG subsidy. I've received LPG subsidy which has fallen into my bank account. Right? I don't have to go all the way to the banking branch. I'll go to the bank sati. I've received a scholarship. It is there in my bank account. I will go to the bank sati. That is the concept of a bank sati. But again, please understand, bank sathis are not doing any charity. Bank sathis are not doing any charity. These are providing services to you. Hence, they will charge a certain amount. They will charge and collect certain amount from you. That is a concept of a bank sathi. Now tell me, bank sathi model will promote financial inclusion. All of you will agree? Bank sathi model will promote financial inclusion. Correct? Now come back. Come back to the discussion. There are two models that I'm discussing now. One is a small finance bank. Second one is payment bank. Both of them will promote financial inclusion. Small finance banks will, I think there is, okay. Small finance banks will promote financial inclusion. Why? Most of the loans given by SFBs, most of the loans given by SFBs will go to small farmers, will go to agriculture sector, will go to small industries. They will collect a lot of deposits from the people. They will target the loans to specific types of borrowers. That is, in case of small finance banks, the PSL target is 75%. Remember this. The PSL target of our small finance bank is 75%, which means they will have to provide more loans to agriculture sector. They will have to provide more loans to micro industries in India. They will have to provide more loans to weaker sections of the society. That is basically the argument of financial inclusion here. That is point number one. Point number two, equity paid up capital. Do you remember the term paid up capital? Please do let me know. Do you remember paid up capital? Right, couple of minutes ago, that is before the break, we have discussed paid up capital. Paid up capital means shares are issued, money is collected. So the minimum equity paid up capital for a small finance bank is 200 crore rupees. 200 crores. That is, who are the owners of the bank, right? Who will start this particular bank? The owners should invest at least 200 crore rupees into the small finance bank. Third one, even foreign investments can be brought. Even foreign investments to start a small finance bank is allowed. How much is allowed? Up to 74% of this investment in a small finance bank can come from the foreign sources, that is FDI. Right? Foreign investment is allowed in the small finance bank. Now, point number 4 regarding small finance bank. What are the functions? The small finance bank will collect a deposit and will provide loans. But please focus on the providing loans part. The loans which are supposed to be provided by the small finance banks, they are supposed to meet a target of 75%. A target of 75%. PSL target for the small finance banks is 75%. And remember this, they will not target large companies. They are not going to give loans to large companies. They are going to target small farmers. They are going to target, right, the micro farm. I'm sorry, they are going to target marginal farmers. Now, many of you ask me, sir, what is this marginal farmer? What is a small farmer? I'll give you the definition. Please remember this. Later, when I discuss agriculture, again, you'll have to use it. The classification that is generally followed is a marginal farmer, small farmer, right? Semi-medium, medium farmers, semi-medium, medium farmer, and a large farmer. Right? Marginal, small, semi-medium, medium, and large. Some of the books will not give semi-medium. Don't worry, because they have brought the semi-medium as a part of medium. Now, what is this classification? If a farmer will cultivate on a land up to 1 hectare, up to 1 hectare, if you're cultivating on a land up to 1 hectare, right, you are referred to as a marginal farmer. Small farmer, more than 1 hectare, up to 2 hectares, up to 2 hectares. Semi-medium farmer, more than 2 hectares, up to 4 hectares. More than 2, up to 4. Medium, more than 4, up to 10 hectares. And large means more than 10 hectares. More than 10 hectares. All of you okay with the definition? Anybody has a problem? It's a very simple, right, logical definition. Marginal means up to 1 hectares, right? Small means more than 1, up to 2 hectares, right? Semi-medium means more than 2, up to 4 hectares. Medium is more than 4, up to 10 hectares. And large means more than 10 hectares. And those who are saying, sir, it is hectare or acre, my dear, hectare, acre are measurements. All of you understand? Hectare and acre are measurements, just like centimeter and foot. Correct or not? Centimeter is also measurement of length. And what about foot? Right? Or let's say 12 feet, 12 foots, 13 foots, etc. That is also measurement. Our argument is simple. Around 2.5 acres. Around 2.5 acres is equal to 1 hectare. Right, I'm just rounding up the numbers. Simply remember 2.5 acres is equal to 1 hectare. So whether it is given in hectare, whether it is given in acre, doesn't matter. Right, focus on the classification. Now look at the number here itself. All of you will agree you need to provide more and more loans to the marginal and small farmers. Look at the classification here itself. You tell me you need to ensure more and more institutional credit will go to small and marginal farmers. That is exactly what the small finance bank is doing. That is exactly small finance bank is doing. That is, they will target small and marginal farmers. They will target micro and small enterprises. They will target poorer sections of the society because they find these institutional credit very, very difficult to get access to. So they will target these kind of population. Okay. What are the prudential norms? That is conditions. They will have to maintain CRR as well as SLR because they will come under the regulation of RBI. Simple. They will come under regulation of RBI. They will have to maintain it. They will have to have PSL of 75%. At least 50% of the loans which are given should be below 25 lakh rupees. At least 50% of the loans given should be below 25 lakh rupees. Some of you might be thinking, what is the logic behind it? Why at least 50% should be below 25 lakh rupees? It is to ensure that large number of farmers will get access to loans. Yes or no? Large number of farmers will get access to loans, because if I simply give you a target of PSL of 75%, you will give large value loans. You will give 20 crore rupees, you will give 10 crore rupees, you will give 5 crore rupees, and you will say, I've met PSL target of 75. But what if I say you will limit half of the loans that you give should not be more than 25 lakh rupees? Does it not mean you will have to give more number of loans to reach PSL of 75%? That is the reason why they have kept such a condition. Okay, so that is in the context of small finance bank. Next one is payment bank. And next one is payment bank. Okay, and after payment bank, we will stop the discussion today. We'll take up questions, because for the last couple of days we have not discussed any questions, because the chapter is very large, very important for UPSC. We'll discuss questions after this concept. Don't worry. Okay, today we'll discuss questions. What is the concept of payment bank? Again, the logic is simple. Payment bank is a type of differentiated banks. It's a type of differentiated. It is a type of differentiated, also referred to as a niche bank. Also referred as a niche bank. Right? Again, please do let me know. Do you remember the difference between a universal bank and a differentiated bank? Please let me know. Do you remember the difference between what is a universal bank and what is a differentiated bank? And that is, if you remember the classification that I gave you, the banks have primary functions as well as secondary functions. Universal banks will provide primary plus secondary, right? That is, for example, State Bank of India. Whereas differentiated banks will provide very limited functions, not all the functions, very limited functions. Okay. Now, payment banks are a type of differentiated banks, just like small finance banks. SFB is also differentiated bank. How much is the minimum equity paid up capital? 100 crore rupees. You are allowed to bring foreign investment up to 74% in setting up of a payment bank. You'll have to maintain a capital adequacy ratio of at least 15%. CAR should be at least 15%. And out of this 15%, tier 1 capital should be at least 7.5%. Tier 1 capital should be at least 7.5%. Right? Apart from this, the payment banks are not allowed to issue credit cards. The payment banks are not allowed to give loans. They can collect deposits from customers. They can collect a deposit, but per customer they are not allowed to collect a deposit of more than 2 lakh rupees. Earlier it was only 1 lakh. Now it has been doubled to 2 lakh. Please remember this. They are allowed to collect deposit, but not more than 2 lakh rupees per customer. No credit card, no loans, and 75% of the money that they have collected, they will have to invest in government securities. They will have to invest in government securities. No option there. Remaining 25%, they will keep with other banks in the form of deposits. This is basically the model of payment bank. Now, many of you will ask me, sir, what is the logic behind it? Why does RBI do this? Right? Why should anybody start a payment bank? Very valid question. In fact, I'll tell you the evolution. Listen to me very carefully. When RBI proposed the model of payment bank, many came forward. That is, many companies came forward and they applied for the license for the payment bank. Right? Many were interested. But once they received the license from RBI, they realized that it is not very profitable to operate payment banks. It is very difficult to operate payment banks. Why? The most important function of a bank, where they generate lot of money, where they generate lot of revenue, is giving loans. But you're not allowing payment banks to give loans. So don't you think how much revenue they can generate by investing in G security, by keeping deposits with other banks, by providing bank sati services to you, by providing remittance services. Remittance means transfer of funds, etc. The amount of revenue generated will be very limited. So that is the precise reason when the RBI gave licenses, many of the companies who had got the license said, no, we don't want to operate payment bank. They surrendered. Surrendered means they returned the license back to RBI. And many of them who are operating, even today they're facing issue. In fact, I'll give you one example. Aditya Birla Company, all of you heard of Birla Company? Aditya Birla Company. Aditya Birla Company earlier had a license for payment bank. They in fact launched a payment bank. They incurred losses and they said we will not be able to operate payment bank, and they shut down the payment bank and returned the license to RBI. Now coming to another very important point, then why does RBI do this? Why does RBI, right, imposing so strict restrictions, so stringent conditions on payment bank? I'll tell you the logic behind it. Listen very carefully. Now, understand the point here. What would you prefer? I'll give you two examples. What would you prefer? Suddenly, one entity will get universal banking license and they will start providing all the functions, all the services that the bank will provide. Or this is one example. Another example, right? One entity wants to open a bank. RBI says, I cannot allow you because you do not have any banking experience. I cannot allow you to directly start collecting people's money without any limit. You might mess up. You might simply take wrong decisions when you collect a lot of money, and depositors will suffer because of it. So, concern is that you don't have any banking experience, right? I don't know how you are going to manage the finances effectively. So, what I will do is, first, I will give you a license of a payment bank. Look at this and do let me know. I'll ask you a question. Okay. First, I will give you a license to operate as a payment bank. After 5 years, if you're operating very well, if you are operating the payment bank very well, then I will allow you to convert this into a small finance bank. I will allow you to become a small finance bank, which means no restrictions on the deposits that you collect. You can give loans, but condition will be 75% has to go to priority sector lending. Now, let's say once you become an SFB, you'll operate wonderfully well, right? You will manage the banking activities very well. Now, I have sufficient confidence on you. After maybe 5 to 6 years, what I will do is I will allow you to become a universal bank. I will allow you to become universal bank. Now, please tell me, as a customer, not as a company, as a customer, right? Don't you think following example 2 is a better way to provide universal banking license compared to example 1? All of you will agree with me? Following the evolution like this, first operate as a payment bank. Prove to me that you can manage the finances. Then I will allow you to work as SFB. Then I will allow you to become a universal bank. That is a much better methodology to evolve rather than directly giving you a universal bank license. Right? Some of you do not agree with me, but this is what RBI says. This is what RBI says. Right? It's like once you become IS officer, can you be appointed directly as a cabinet secretary? Think of it. Just think of it. Once you become an IS officer, right, the next 2024 you will write, 2025 your results will be out, right? You are in the IS cadre. You will finish your 3 months training in right Missouri and directly cabinet secretary. My dear, what is the experience? You do not know what is the role of a cabinet secretary. You only have heard that cabinet secretary position is one of the highest position that the IS officer can reach. You've heard of it. You want to become that. Suddenly you will be made cabinet secretary. What is the use of it? You do not have any kind of experience. You don't know how the policy is made. You don't know how to operate. Right? So that is the reason evolution is important. So RBI says experience, experience. Prove to me that you can handle finances. Then I will allow you to become a universal bank later. Right? That is the reason. At least now all of you will agree that is the reason. Despite having universal banks, we have small finance banks. Despite having small finance banks, we also have payment banks. Does it make sense to you? Why so many types of banks in India? Why so many types? Why not simply one type of a bank? Okay, so this is a discussion I wanted to have today. Tomorrow we'll take up committees. Tomorrow we'll take up committees. Last certain concepts are there. We'll finish it up in the first maybe half an hour, 45 minutes tomorrow. Let me discuss questions today. For the remaining period of time, let me discuss questions, solve them, then tell me, right, do you require conceptual clarity regarding the banking or not? Okay, let's start. Okay, interesting answers. 44% have answered correctly. The money multiplier in an economy increases with which one of the following? Money multiplier increases with which of the following? Let's start. Increase in the CRR, increase in the SLR. Please tell me. If RBI will increase CRR and SLR, money multiplier will increase. Participate, please participate. Will rise in CRR and SLR, will it increase money multiplier? No. That is, if you remember the formula, M3 upon M0. M3 upon M0. In fact, I was expecting this question, right? I don't know if anybody has asked it because I checked it. I did not find that question. I'm saying I did not find it yesterday. That question was, sir, why do you take M3 upon M0 as a money multiplier? There is also M4, correct? There is also M4. Why not take M4 upon M0? Think of it. Why not take M4 upon M0? Why are you taking M3 upon M0? Why M3 upon M0 is taken as a money multiplier? Reason is simple. Simple. M3 and M4, what is the difference? Post offices. Correct? M3 and M4, what is the difference? Post office deposit. Post offices do not give loans. I hope you understand. Post offices do not give loans. Right? The loans are created by the banking sector. That is the reason we will stick with M3 upon M0. Is it okay? Right? Suddenly in UPSC, if this question is asked, don't panic. Don't panic. Right? Remain calm. It's a post office. It is not a bank. Again, now don't say, sir, what if it is a post payment bank? Right? Many of you will try to ask a counter question. Sir, I heard India Post Payment Bank is there. What if they have collected deposit? Will they cause money supply? My dear, payment bank. Will they give loans? Think of it. Right, so think of it. So I hope you understand M3 upon M0. In fact, many of the books have used even M1 upon M0. Many of the books, for example, NCRT. If you have read through NCRT, they've used even M1 upon M0 as a money multiplier. But please think of it. Don't you think M3 is much broader to measure the money supply compared to M1? All of you will agree with my argument? M3 is much bigger compared to M1. It is much broader. Hence M3 upon M0. Okay, M3 upon M0. Okay, so increase in the cash reserve ratio and statutory liquid ratio will reduce money multiplier, will not increase the money multiplier. right? Increase in the population of the country, it doesn't necessarily mean money multiplier will increase. But what about option C? Increase in the banking habit of the people. Increase in banking habit of the people. If people will deposit more money, if people will take more loans, will that not increase money multiplier? Is it okay? Will that not increase money multiplier? Of course, yes, it will increase money multiplier. Okay. Next one. Okay, again, very interesting. 46% have answered correctly, remaining have answered wrong. Please focus. Lender of last resort. RBI is referred as a lender of last resort for what reason? Question is, RBI is referred as a lender of last resort for what reason? That is a question. Can I say RBI is referred to as a bank of last resort, a lender of last resort? Because if the banks are facing certain crisis, if the banks are facing certain emergency, they can always approach RBI and borrow from RBI. Yes or no? Please tell me. Banks, RBI is referred as a lender of last resort. In fact, I've written it. It is not there in the PPT. I've written it yesterday. RBI is referred to as a bank of last resort or a lender of last resort for a very simple reason. Banks which are facing emergency or crisis can always approach RBI, borrow from RBI. That is the reason. So point number 2 is correct. Point number 1, lending to trade and industry bodies when they fail to borrow from other sources. Anywhere have you read? Anywhere have I said RBI will lend directly to anybody else except banks? Please do let me know. Anywhere did I say RBI will directly lend to Reliance company? RBI will directly lend to any other institution except banking institutions. Whether these are all India or scheduled commercial bank, doesn't matter. These are banking institutions. So RBI doesn't deal with these, right? Anybody else except banking institutions. Providing, I'm sorry, lending to governments to finance budgetary deficit. Of course, yes. RBI will provide short-term loans to government. Right? For example, do you remember ways and means advances? WMA, ways and means advances. For a very short duration, that is up to 90 days, the central government or the state governments can borrow from RBI. For what purpose? Basically, the governments do not have sufficient money at that point of time, hence they can borrow from RBI. But please understand, that is not because of why RBI is referred as a lender of last resort. That is a function of RBI. But RBI will not be referred to a bank of last resort because of that. Right? So third point is also wrong. Right. So second one is correct. Providing liquidity to the banks having temporary crisis. Right option will be option B here. Right option will be option B. Okay. So second point is correct. Again, some of you are asking, but sir, options have changed, etc., etc. I'm not using elimination method because of that only. If a new type of options are given, only one statement is correct, only two statements are correct, all the three statements are correct, none of the above statements are correct. Right? Even new option methodology can be chosen here. Next. Okay, 51%. Okay, let's start. The governor of Reserve Bank of India is appointed by the central government. Correct? I've given certain sections. Right? So governor is appointed by the government of India. Right? Correct. Statement is correct. Second statement, certain provisions in the Constitution of India gives the central government the right to issue directions to RBI in public interest. No, right? Not as per the Constitution of India, but as per RBI Act. Yes or not? As per the section of RBI Act of 1934, section 7 to be very precise. Section 7 of RBI Act, not Constitution of India. In fact, please remember this. There is only one place where in the Constitution RBI is mentioned. Only one place where Schedule 7. Polity classes over for you. Schedule 7. What does the Schedule 7 discuss? Schedule 7 discusses the three list, or to be very precise, four list, distribution of powers. In the union list, RBI is mentioned. In the union list, RBI is mentioned. That's it. Apart from that, Constitution of India does not discuss about RBI. So second statement is wrong. The governor of RBI draws the powers from RBI Act. Of course, yes. Right? Everything that is done by RBI will come from RBI Act itself. Everything will come from RBI Act. Okay. So 1 and 3 are correct. Right option will be option C, 1 and 3 only. 1 and 3 only. Next one. Okay, 48% have answered correctly. It should have been higher. Let's start. With reference to urban cooperative banks in India, consider the following statements. They are regulated by state governments. Please tell me, is it correct? Don't you think they are more regulated by RBI now? Yes or not? Please do let me know. Right, so first statement wrong. Okay. They can issue equity shares as well as preference shares. It is allowed. It is allowed with amendment in 2020. Right, I know we have not discussed what is preference share. I know what is equity share. We have not discussed. I know that. Please don't worry. But with the amendment of 2020, now they are allowed to issue equity shares as well as preference shares. Third, they were brought under the purview of Banking Regulation Act 1949 through amendment in 1966. This is a straightforward factual information. Statement is correct. So 2 and 3 are correct. Right option for the question will be option B, 2 and 3 only. Okay. Next. Okay, 55% have answered correctly. Very interesting question, by the way. Interesting in the sense conceptual clarity should be there. To combat demand side inflation, which of the following activities would be preferred by RBI? Buy government securities. If RBI will purchase government securities, don't you think money supply will increase? If money supply increases, that will cause inflation. So first one is wrong. All of you okay? First one is wrong. Second, increase the repo rate. Let me know. If RBI will increase the repo rate, what do you think will happen to loans taken by customers? Loans taken will automatically come down, right? Which means the demand for the goods and services will also come down. So second one is correct. Demand side inflation can be countered. Third, print more currency. If RBI will print and supply more currency, again money supply will increase. That will contribute to inflation. Third one is wrong. Decrease SLR. If RBI will decrease SLR, more loan. So the right option is only two here. Right option will be option B. Okay. Next. By the way, those who are asking what is statutory reserve requirement, two types of reserve requirements. One is CRR and SLR. One is CRR and the second one is SLR, statutory reserve requirements. Okay, 33% have answered correctly. Why, my dear? CRR and SLR. Please tell me, what is the use of both these statutory reserve requirements? Don't you think RBI will say, I want you to maintain certain reserves in the form of CRR and SLR so that you will not take very high amount of a risk by giving all the money in the form of loans? Correct or not? Please do let me know. You will not take very high amount of risk by taking all the deposits that you have collected and give all the deposits in the form of loan. That is very risky. So to enable the central bank to control amount of advances, that is loans that the banks can create. First point is correct. Second point, if you remember it correctly, I said under SLR the banks will keep G securities. They'll purchase and keep G securities. Why? What is the use? They can keep it in the form of cash also. They can keep it in the form of G securities. But what is the use of it? Use is if customers will start withdrawing money, the bank will have sufficient assets which have very high liquidity. They can simply sell it and allow the customers to withdraw money. So don't you think it will also help in making people's deposit with the banks very safe, as well as having liquidity in the banking sector? Second point is correct. It will prevent the commercial banks from making excessive profits. No, that is not the agenda for RBI. Fourth one, to force the banks to have sufficient vault cash to meet their day-to-day requirements. That is also not how CRR and SLR is actually planned. Every bank has to maintain certain amount of cash, but that is not under CRR and SLR. Okay, right? So first and second are correct. Right option will be option B. 1 and 2 are correct. Next one. Okay, so we'll stop the discussion here. Don't worry, we'll stop the discussion here. Tomorrow, a couple of more questions are there, right? I believe another 4 to 5 questions. We'll solve the questions tomorrow. Now, before I wind up the discussion, if there is no issue, I'm sorry, if there is any doubt, let me know. I'll address your questions. If a payment bank cannot give loans, then what will constitute its risk-weighted asset? Point number one, no doubt payment banks will not provide loans. No doubt they will not provide any kind of loans. But please understand, payment banks can assess as well as market risk. Let me know, right? Let me know. Payment banks will also face operational risk as well as market risk. Of course, yes, just like any other bank. So they will be facing certain risk for which they will be right? There should be certain capital to absorb the losses. In fact, point number two, payment banks are investing in government securities. They are keeping deposits with other banks. These are the assets, right? So certain risk weightage is given to both of these, and they will calculate risk weighted assets. So argument is simple. No doubt payment banks will not provide loans, but there is a risk associated even with the payment banks. That's the reason capital adequacy ratio is kept at 15%. RBI is the regulator of banking structure in India. Then how come banks like Popular Finance could able to spread more than 270 branches in Kerala and other states, accepting deposits of thousands of people and scammed them very recently? Why RBI didn't take any action for so long? How did this issue can be resolved? My dear, it is not the only. Again, I've not heard of Popular Finance Bank. I've not heard of Popular Finance Bank. I might have not read about it because it's a regional issue. But please understand, generally there will be certain issues with the banking sector. For example, Punjab Maharashtra Cooperative Bank, or for that matter, Yes Bank. So there will be issues with the functioning of the many banks. In fact, RBI also has clearly stated we are trying to become as much proactive as possible. But right, there are issues in the banking sector. Right, there are issues in the banking sector. Somebody, right, for example, Yes Bank was there in the newspaper because of misselling, right? No doubt there was a issue with, right, let's say how they operated, right, the way they invested, etc. There were concerns, but there was also an allegation against Yes Bank. They basically missold their additional tier one bonds to customers. That is, the customers were not informed regarding the risk component associated with additional tier one bonds. So I hope you understand RBI is trying to remain proactive, but it doesn't mean, right, banks will not try to, right, missell the products, or banks will not, right, be involved in corruption, etc., etc. These things generally keep on happening, even though RBI is very proactive. Okay. Explain CRR and SLR. I'll repeat it. CRR and SLR, why should the banks maintain it? One, under SLR, banks will keep G securities or cash. What is the use of it? If a customer wants to withdraw money and they don't have cash, then they can simply sell the G securities because the liquidity is very high. So safety and liquidity. That is one of the objective. And second, RBI says if there is no reserve requirement, whatever deposits you have collected, you will lend in the market. You will give loans in the market using all the deposit. That is very risky. That is very, very risky. That is the problem. Okay. Okay. Explain the first slide. Which is the first slide? Which is first slide? I don't know, Baba. Okay. Any other questions? Any other questions? Sir, if a cooperative bank comes under Regulation Act of 1949, the pay scale of employees be same as public sector bank? No, absolutely no. Cooperative banks, the employees, the pay scale for their employees is very, very less. Regional rural banks also face this issue. RRB is cooperative banks because please understand they are competing with the private sector bank, they're competing with the public sector banks in order to attract human resources, because their pay scale is very less. They find it very difficult to attract very good human resources. Okay. Will UPSC ask mains questions from this chapter? If you look at the trend, the last 5 years trend, no question has been asked from this chapter. But prelims, generally 4 to 5 questions are asked from this chapter. Right? 4 to 5 questions. Okay, done. So let me stop the discussion today here. We can continue the discussion tomorrow. We'll start with Narsimham committee. We'll meet tomorrow sharp at 5 p.m. Okay, take care. See you tomorrow. Good night.